workers really means that you're getting some more acute upward pressure on wages. If you think back to Chair Powell's comments in late November when he made that hawkish pivot in congressional testimony, he pointed to the ECI, the Employment Cost Index, not really the most familiar macroeconomic variable to many, but an important one because it's a broad measure of wage pressure, of labor costs, and you see those moving up now with the tightness in the labor market.
Andrew, one thing in the notes yesterday that was notable to me was the fact that the Fed is going to be data dependent when it comes to shrinking the balance sheet. What data do you think the Federal Reserve members are looking at to determine whether to start shrinking its books as soon as this mid-year? Because that seems to be some projections at this point.
Yeah, so I think there's first the data on the real economy. And the question there is, are we sustaining strong demand? And so far, the story of the last several quarters has been that demand has held up very well. And even through Omicron, it looks like demand is holding up well. Is that creating upward pressure on prices that continue? Of course, we've had inflation that's overshooting. So that's really important. Does the Fed need to lean against higher inflation? And again, I think that they'd like to be on a gradual glide path. If inflation stays a little bit higher, then you're going to start looking as a policymaker for ways to actually put restraint on the economy, which could be through reducing the balance sheet and raising yields. So that's on the real economy. But then also the financial market data. How are yields reacting? How are risk asset prices reacting? And again, I think from the Fed's perspective, yes, we've seen some movement. There was, of course, a reaction to the minutes yesterday. But this is still really all in the context of financial markets that are staying quite well behaved.
So how quickly do you think that it will take for the Fed's rate hikes or even potentially shrinking the balance sheet to reach the real economy?
Yeah, and I think that's part of why we're focusing on the balance sheet here and why the Fed is a little more focused on the balance sheet. And you saw a mention of that in the minutes, this idea that you can raise overnight policy rates and not put a lot of restraint on the economy. And something I know you've talked about on your show is the level of real interest rates. If you take the nominal rate, you subtract the inflation rate. With inflation running higher, you can actually argue that we've had a loosening of policy in terms of not just asset purchases that have continued, but inflation that's moved higher and pushed real rates lower. So just raising the overnight rate, if long-term real rates stay low, that's not going to do a lot to restrain the economy or to bring down demand. Really what you would look for are 5-year real interest rates rising, or 10-year real interest rates rising. And that's why the Fed maybe is thinking a little bit more about the balance sheet, because if you were looking for a technical factor that's pushing down long-term yields, I don't think you have to look a lot further than the Fed's balance sheet.
Andrew, I think what you're talking about is so important. It goes back to a conversation we've had repeatedly on this program. Do they need to engineer tighter financial conditions? Do they need to do that?
And I think where they are now is that they're hoping that they don't need to do that in a significant way. And I think that is the risk that's being run here. And I think you see that risk being acknowledged. Even relatively dovish Fed officials, Minneapolis Fed President Kashkari, talking about the risk of these higher inflation scenarios. In the best possible world, you would need only very modest tightening of financial conditions. That would be enough to kind of keep inflation heading down towards 2%. But where are we right now? Inflation has been heading up. Now, on a year-on-year basis, it will probably come down. But these monthly readings have been staying strong. And I think that's what the Fed will be assessing in the economic data. If those inflation readings come in strong, then you'll need more restraint. And that means that you'll need tighter financial conditions. And to your point, John, we've had low real yields and we have high equity prices.
Been super loose, super loose. So the final question for you then, Andrew, as they sit down at the next Fed meeting, let's go to the March meeting. That seems to be the one a lot of people are focused on, the glide path to March. As they sit down, is that show me why I should hike or show me why I shouldn't?
I think we've really quickly transitioned to why shouldn't we be hiking? And I think there are some potential answers to that. We'll see in the jobs report tomorrow if labor force participation comes up, if the unemployment rate maybe even ticks higher. Those could be reasons for the Fed to be a little bit more gradual here. But if that unemployment rate comes down, the only reason you're not hiking now is because you're not at some theoretical notion of full employment. I think it's going to be hard to argue that. And the question very much is going to be, why shouldn't they be hiking at that meeting?
Andrew, great to catch up with you, sir. Just fantastic as always. Andrew Hollenhorst there of Citi. Quickly, we bring in the conversation to March of this year, Tom, just a couple of months away. Maybe that's when the first interest rate hike comes. We've talked a lot about that piece from Neil Kashkari, the Fed president over at Minneapolis. This line here, Tom, the costs of ending up in the high inflation regime are likely larger than the costs of ending up back in the low inflation regime. And that's why even the biggest dove on the Fed right now, Tom, sees a reason to get moving.
Yeah, I mean, it's the asymmetry that the pros talk about here, and it's always asymmetric. And this, I think Neil Sauce at Credit Suisse was very good about this years ago. John, it is an asymmetry. Okay, I'll go with that. But the question is, what do you do? And I'm going to suggest this central bank, the Bank of Canada, before we see the Fed, and every other central bank is the same. They're completely and originally data dependent right now. And that's what they're going to do. They're going to stay on the data, and they're going to massage every single statistic that comes out.
And some people might say, though, Tom, and Lisa, I'd love your view on this, that they actually became less data dependent as the year went on. They started ignoring the data and telling everyone that this is where it's going to be next year. And everybody was saying, well, this is where it is now. Look at what's happening right now. And they seem to have woken up to that.
That seems to be exactly what people are realizing, is that data dependent didn't really mean data dependent last year. And this year it does. How much are they going to pivot if they'd see, for example, the data showing inflation waning as they had previously expected? Or is this an indication that they're seeing the supply chain disruptions persisting, which a lot of the data points to, as well as wages increasing more than they expected, plus that rent picture? The rent component is such a big deal that really has risen much faster than people expected. They're seeing that, and perhaps they don't now have faith that it's just going to roll off in the same way that they did even a month ago.
We've got a minute here, an important 60 seconds. And Tom, I promised the audience we'd get your response to what's happening with Novak Djokovic. What's the Novak point of view from Tom Keene?
Well, here it is right now. First of all, John, I'm flattered because you never want my view. You always want Lisa's view and not my view, and I don't know what that's about. Here's my observation, John. Percent vaccinated, Australia, 92%. Percent vaccinated, Italy, 85%. Percent vaccinated, America, 62%. John, we're the Djokovic of nations.
Rafa saying, get it done. Rafa saying, get it. Rafa
Exactly.
usually very reserved, saying, get it done. Get vaccinated.
You know that.
Yeah. Fantastic, Tom. I was looking forward to the sports point of view from you. I'll get more of that. Stick with us through the morning for Tom Keene on sports. Futures unchanged on the S&P. Yields higher on 10s by 2 basis points at 173. From New York, a beautiful one as always. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden is preparing to blast his predecessor today in a speech marking the one-year anniversary of the riot at the Capitol. The address will include a blistering critique of Donald Trump. President Biden also will call on Congress to pass voting rights legislation aimed at heading off changes sought by Trump loyalists in state governments. In Chicago, public school classes have been canceled for a second day in that dispute involving the teachers union. Teachers voted to shift to remote learning, and the school district called it an illegal strike. The union and school officials can't agree on issues such as COVID testing. And in South Africa, there's an indication of how the latest stage of the pandemic may play out globally. The number of excess deaths from the Omicron-driven wave of infections has peaked at a fraction of the numbers seen in outbreaks caused by other variants. South Africa was the first country to be hit by Omicron. And in the UK, there's more evidence that inflation is eating into confidence across the economy. More British businesses than ever before are worried about inflation, and a record number plan to increase their own prices. That is according to a survey by the British Chambers of Commerce. General Motors has entered the battle of battery-powered pickup trucks. GM CEO Mary Barra showed off the new electric Chevrolet Silverado at the CES exhibition. The truck will compete with battery-powered pickups from Ford and newcomer Rivian. GM says the Silverado will have more range and greater towing power. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
December's jobs report was a mixed bag.
The change in non-farm payrolls comes in only half the level we anticipated.
If you looked at unemployment, it's a fairly decent report, isn't it?
It's a terrific report.
How will Omicron show up in the final look at 2021 jobs?
COVID is clearly an issue.
The number one risk is a pandemic.
There's going to be a bit of a roller coaster ride.
Tune in for the December jobs report, Friday on Bloomberg Television and Radio.
Mentioned the 1.5 million tests. That's quite a feat. At the same time, I've seen estimates say that'll get you through about a week or so. What do you do after that?
Let's be smart with our resources. Why not use the test strategically when you need them? How are we using them? A child is diagnosed with COVID in a classroom. We give that entire classroom take-home test kits so their parents can test them, so we can determine if we should close down the school or just the classroom, or what we should do with that particular facility area. What has happened in the past, you had one diagnosis, we want to close the entire school. That just makes no sense. Instead of using our resources in a strategic fashion, the science has shown just because one child has COVID in the classroom, it doesn't mean the entire school or the classroom is infected. We're going to be smarter, and we're going to pivot, and most importantly, we're going to defeat COVID.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Right now, we just don't have enough tests. Access to tests is extremely challenging. Systems are overwhelmed. Rapid tests are expensive, but also not available to major parts of our society. If you are symptomatic, given the current pandemic, you should isolate for the full 10 days.
The confusion around this in the past week, unreal. Dr. Bhakti Hansati there of Johns Hopkins from New York City this morning. Good morning, Tom Keene, Lisa Bramett and Jonathan Ferro. Your bounce back, where is it? On the S&P 500, we're -2, down by 0.04%. After yesterday's big downdraft on the NASDAQ 100, we're down another 69. We're -0.4%. Yields still higher in the bond market, up 3 TK, 173.34 on 10s.
The market's really important right now. I've really been emphasizing, John, across equities, yes, but bonds, currencies, commodities, careful analysis today as we go to Michael McKee, that 8:30 claims report on the jobs tomorrow. It is about the markets. It's also about what we're all living, which is quieter streets, all the turmoil at schools nationwide, in a raging debate in Washington about the leadership of this stage of this pandemic. We've been trying to find excellence in medical voices, and we do that now with Christian Breyer. He's with Johns Hopkins University, truly expert on Thailand and expert on the epidemiology of frontier economies. Dr. Breyer, honored that you could attend with us today. There is a point, Dr. Breyer, where there is a divide, and I would say the divide was the textbook Morrison and Boyd in organic chemistry, and there was a modest book in biochemistry called Leninger's Biochem. Rachel Walensky picked up Leninger's Biochem at Washington University long ago and has had a sterling career in vaccination. Let me cut to the chase. Is the head of the CDC, is her job in jeopardy this morning because of the communication that we've seen?
Well, I can't really comment on her job in jeopardy with the administration. I do think that they really need to do more coordination across the government, across the administration. And the CDC leader has important roles to play in that, but isn't and shouldn't be the chief voice of the policy decision. She needs really to be the scientific surveillance, data-driven voice. And I think that as we all know, we've been living through an enormous surge with a very infectious virus. The guidance has changed. It needs to change, but the communications from the administration as a whole have been challenging.
This is critical because the United Kingdom has provided leadership by jettisoning as a general statement PCR. Are you suggesting in the coming hours, or may I say days, that you'll see the U.S. follow suit and jettison PCR certitude?
Well, that I don't know for sure that is going to happen. I think that there is some evidence that's emerging about some of the tests not picking up Omicron. And we have to remember that the way that Omicron was first really detected in South Africa was because of its variance on PCR testing there. It's just such a very variant virus. The early studies that are suggesting the rapid tests may not pick it up as efficiently are not yet peer-reviewed, and they're relatively small, but that's something we're really paying close attention to because, of course, people are relying on rapid testing at home to make all kinds of decisions.
Dr. Beyer, how close are we, from your estimations, of getting more rapid tests and making them available, since this does seem to be the key aspect, kind of locking the hands of the CDC to recommend that everybody get these before they emerge from isolation?
Yeah. We were concerned a couple of weeks ago that the increase in testing and the availability and the administration's plan to make them free and more widely available was not going to happen in time to deal with the holidays and the post-holiday curves that we're seeing, and unfortunately that's exactly what's happened. So the estimate is roughly that by the 3rd or 4th week of January we should be coming out of this testing shortage, but that again is not going to be in time to deal with the post-holiday waves of infection that we're seeing. So we're going to have about 2 weeks where people are still going to be frustrated we won't have enough tests.
Doctor,
those 2 weeks are going to be critical.
Forgive me for jumping in, sir, because we only have a couple of minutes left. You've touched on, I think, the heart of the problem for a lot of people when they listen to the CDC. Am I listening to the science, or am I listening to some convoluted version of behavioral psychology? At the very start of this pandemic, we were told that masks weren't that useful because we didn't have that many masks. And now we're being told we don't need to test out of isolation. And lo and behold, we don't have many tests. And I'm trying to work out whether policy is shaped by scarce resources or science. Which one is it, Doctor? Is this policy dictated by scarce resources or science?
Well, I'm afraid you're quite right that it's a mixed picture, and that I think is part of the challenge with the communications. You want it to be driven by science, but there also has been a kind of try to balance, the administration has been trying to balance what the American people will tolerate. A great example of this is that Tom alluded earlier to our lower testing rates than other countries. That is really true. We're still only at about 62, 63% fully vaccinated. So what do we do about mandating, which many people would say the science supports, but the politics of mandating vaccines in this country are very challenging. And so that balance is what you expect an administration, a government to do. But what we want to see from the CDC, of course, is not that they are taking those political calculations, but rather that they are really looking at what is the best evidence and tracking that evidence as it changes and communicating that indeed there are going to be changes like we've seen with Omicron. It is way more infectious, probably twice as infectious as Delta, but it does appear to be producing less serious disease. The hospitals are jammed. We are back on emergency standing here in Maryland and in Baltimore, but the ICUs are not as crowded, and the people in intensive care are unvaccinated. That hasn't changed. That's still the science.
Doctor, thank you, sir. Your view on this is always vital. We appreciate your time and, of course, the hard work that you do every single day. Dr. Chris Beyer there of Johns Hopkins. And, Tom, that's the issue so many people have with the CDC at the moment, and that's why, over time, we've eroded trust in these institutions over the last 2 years.
I do agree the trust is under threat. I really want to make clear, John, and I'll be honest, when I came out of school at the Rochester Institute of Technology, there was a real short list of employment, and at the top of my reach was CDC. They were the absolute pinnacle at this, and frankly, they still are, but they got to get back to the science and let Fauci and the White House do the politics.
That is so important, Lisa, and I think for a lot of people over the last year, that's been a big complaint that I've heard, and I know you have as well.
Yeah, I mean, frankly, it's incredibly confusing, and you don't want to feel like you're being sort of misguided or don't get all the information from a scientific perspective. It seems there's also this discomfort right now at the CDC of acknowledging vocally that we are moving to this endemic phase, that there's not much that we can do to stop it, and that we just kind of have to live with it, get sick as we may, and move on.
Well, the UK is trying to move on quickly, that's for sure. We can touch on that another time. Lisa Bravitz and Tom Keene, together with myself, Jonathan Ferro, we got a lot to talk about in this market. Very shortly, Seema Shah of Principal Global Investors on an equity market getting shaken up by some Fed minutes and some talk of balance sheet reduction. Yields higher by 3, up 3 basis points to 173 from New York City. On TV and radio, this is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? a question or visit SearchGo to find answers now.
The good news for investors is this bull market probably does have some legs.
The Fed and the Powell put are very real.
The rotation and reflation trend, it is an invite to repeated whipsaw.
There will be much more pressure and much more focus on active management as the type of return potential comes down a bit.
You're going to need someone to actually be making decisions if you want to navigate what could be a very treacherous 2022.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
A warm welcome to 2022 from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your NASDAQ lower again, down 67 on the NASDAQ 100. Tom Keene down 0.4%.
Markets on the move, and it's really not to me the equity markets today, John. It's much more the bond market. I think we need scope and scale, John, on the real yield. This is the 10-year inflation-adjusted yield from the depths, John. You do this because of your property Friday afternoons at 1-ish, 2-ish p.m. Negative 1.20. And we've leapt, John, out to where we are now, negative 0.83. In pandemic level, beginning Advent, Valentine's Day of 2020 is a negative 0.60. How far we've come, how fast?
It's Valentine's Day your marker for all of this, Tom? Feb 14th, going through the bond market.
It
Lisa,
always is. Valentine's
I'll get
Day
you either way on this as well. Negative 83 from negative 1 point something. We move 20 basis points and we move quickly.
The move that's quick is the issue here, to me. The idea that we've got a speed, a pace, and it seems to have momentum, where all of a sudden the real yields are becoming much less negative. And as George Saravelos of Deutsche Bank said this morning, this really holds the key to risk appetite this year. If the Fed does double down on reducing the balance sheet, does want, to your point from earlier in the show, John, does want to disrupt markets a little bit more just to tighten financial conditions enough to be a transmission into the economy, are markets prepared for that?
I don't know. And Lisa, before we run away from this, I think we've got to go back to a question you and I talked about in the previous hour. What did we hear yesterday that we did not hear on December 15th? Why was this reaction in this market so much more violent than what we saw a month ago?
The detail about the balance sheet reduction, that they could move sooner and that they could move more quickly in terms of reducing the overall size, the pool of assets that they hold on their books, was notable and was significant. And it indicated a more widespread belief that they needed to move toward this type of policy sooner rather than just a number of outliers like Jim Bullard.
And shout out to people like Mohamed Al-Arian, Tom, who came on in the summer of last year and said, let's go. Let's get moving.
Like a genius. Thank you for bringing us up. It's like the resurrection of the New York Jets. John, I'm so glad you mentioned this. Dr. Al-Arian has absolutely nailed this.
Nailed the policy call and a whole lot more. We can talk about that in just a moment. Let's talk about this market. Futures lower on the NASDAQ, down 60 points. We're down 0.4%. On the S&P 500, totally unchanged on S&P 500 futures. But here's the move in the bond market. We've talked about real yields. Let's talk about nominal yields. Up 3 basis points on 2s to 86. Up another 3 on 10s to 173, just short of 174. And Lisa, just short of the highs of last year in this Treasury market.
The move has been rapid and it is very decisive. Today, we're going to get a data dump, which the Fed will be watching. So will all the market participants, about how quickly the Fed will actually move versus just try to indicate. We get U.S. initial jobless claims at 8:30. The expectation is for another very low reading of 195,000. Its pre-pandemic average is way below that. And we are looking at this ongoing recovery in the most elegant chart out there on the terminal, as Tom likes to say. Key question is whether businesses start to lay off workers as they typically do this time of year after the holidays, or whether they keep them, whether they actually plan to make them permanent due to some of the staffing shortages. At 10 a.m., another data dump, U.S. November factory and durable goods orders, as well as what I'm watching, which is December ISM services data. We saw unprecedented strength in the recovery, in the momentum in the services sector. How much of a dent do we see from the Omicron variant? The expectation is not significant. And to me, this also speaks to the Fed's urgency of getting a move on, even as we deal with this latest wave of the virus. And then at 1:15 p.m., among the Fed speakers today, we get St. Louis Fed President James Bullard, who's going to be at an event hosted by the CFA Society of St. Louis. To me, the questions, the answers that he gives on the balance sheet are key. From the meeting minutes yesterday, I just want to read out this paragraph, which caught my attention. Almost all FOMC members agree that the balance sheet reduction should happen after the first rate hike, but they judge that the appropriate timing of balance sheet runoff would likely be closer to that of policy rate liftoff than the committee's previous experience. Sooner and faster, John.
Faster, the key word in those minutes yesterday. Joining us now to discuss, Seema Shah, Chief Global Market Strategist of Principal Global Investors. Seema, it's one day. It's one day of a pretty violent move lower on the NASDAQ and in particular pockets of this market off the back of what we saw in the Fed minutes. Is that one day a flavor of what we can expect in 2022?
I think it gives us an insight into the kind of volatility that we should anticipate going into 2022. You know, we have, of course, we have inflation still very much elevated, so that's pulling through some of the concerns that we had in 2021 right into 2022. And then on top of that, of course, we have all of the Fed moves. You're getting tapering, you're getting rate hikes, and potentially balance sheet runoff all in 1 year. So, of course, this is going to be a volatile year, and I think investors have to be really prepared for the kind of moves that we might be seeing.
Seema, within your very thoughtful note, there's not the idea of a surprise of 2022, which would be a more resilient, higher inflation. Are we changing our probabilities right now, and do we need to game in with a nominal rate move, a more resilient, higher inflation?
Yeah, it's interesting with the inflation story. You know, we do see inflation coming down from the levels that we've become accustomed to in the last 2 or 3 months. But at the same time, although it's coming down, we're still likely to see inflation settling at a level which is higher than what we've seen over the last 10 years, right? So this is a kind of above the 2% target, and it's something that the Fed inevitably has got to respond to. And when we think about inflation, I think from an investment perspective, the key story here is, as you were saying before, it's about real rates. You know, what is happening to that? One of the debates that we have on our team time and time again is, will we ever, you know, will the Fed really permit real yields to get back into positive territory? And how will markets respond? We go through this time and time again. And, you know, of course, recently with this jump up in real yields, it's a question which is maybe getting a little bit closer.
Okay, but let's take it to Principal Global in your institutional clientele. If we get some form of final movement in real yields, even to a lesser negative or even, excuse me, the plague, a positive statistic, Seema, if we get that move, what does it mean for earnings in the animal spirits or corporations? Don't they do pretty well in a higher nominal yield environment?
You know, I'm glad you said this point, because look, when we think about equities, we've got to think about rates, but we've also got to think about earnings. And the outlook that we have for 2022 is still a very solid recovery. It's still a very strong economic environment. We can look at the labor market performance, we look at the demand, the continuous demand, and actually we do see supply constraints easing through the year. So manufacturing should hopefully get a bit of a boost coming into the second half of the year. So with all of that in mind, actually earnings growth stays positive. It's not as strong as 2021, certainly, but it's still quite positive. And against that backdrop, you may not see equities doing extremely well, but we do continue to see positive returns based on that still solid earnings recovery.
Seema, this is the reason why so many people are hiding out in their inflationary stocks, in particular the banks and some consumer discretionaries as well. When do you lean against the mood right now and catch the falling knife that is big tech, especially after hedge funds just had the most violent bout of selling for the past 4 sessions, going back more than 10 years in Goldman Sachs data?
Yeah, you know, so we have continued to hold some of our overweight positions to big tech. We have been really in favor of mega cap tech for a while. We've continued to hold on to that, even as conditions for tech become more challenging. And we have to recognize that, look, bond yields are biased higher. Okay, we don't think they're going to move significantly higher, and this is key because we do see inflation coming down through this year to a 2.5% level. We're definitely not seeing the kind of 5s continuing throughout this year. So we have that forecast. Now, as we're thinking through big tech, we have to think about the cyclical environment as well. You know, the work from home, that kind of thing, it's gone. So actually, the cyclical environment is not in favor of big tech. But from an investment perspective, we also have to think about the long term. And you want to be looking at companies which have got those big balance sheets and can continue to deliver earnings. So we actually still think it makes sense to have an allocation to big tech, certainly not as big as we've had in recent years, but we still think it's an area of defense within the portfolio which makes sense in a year which continues to be challenging. But at the same time, look, mega cap, whether it's growth, whether it's value, I think that's what's key. And with rising yields, it may be that actually mega, very large banks is probably the area that we could see some rotation towards this year.
Seema, can we finish on a tricky one? What would you buy and hold through the rest of this year? The FTSE 100 or the S&P 500?
The S&P 500.
Seema Shah of Principal Global Investors, thank you. Thank you very much. Big conversation this morning, Tom. Big conversation, for a reason, TK, because no one really allocates to the index that is the Dow passively. Can we talk about, Tom, the conversation that came up this morning? Higher yields, does Europe outperform? Goldman suggesting that could be the case, Tom.
We've been waiting for that, John, for 18 months. I mean, you know, correct me on 18 months, 20 months, whatever it is, but there's been a whole relative EU trade from a very lower level as well. I go back to the technological vibrancy, or what, say, David Stubbs at JP Morgan talks about, which is just the technological ferment that is out there. Are you going to bet against that?
Lisa, are you going to bet against that?
Well, some people are saying it's not just the technological firmament of the United States, it's the fact that the ECB is more likely to stay on hold for longer, even as the Federal Reserve tightens policy, and that divergence will allow Europe to recover more fully and actually be where the U.S. was last year. And that, I think, remains to be seen, John.
Lisa Abramowitz, Tom Keene, Jonathan Ferro. A lot to talk about in this market. Equity futures, slightly positive on the S&P, up 4, up a tenth. Slightly negative on the NASDAQ, down 47, negative a third. From New York City this morning, for our audience worldwide, heard on radio, seen on TV, with yields higher 3 basis points to 173. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. President Biden will mark the one-year anniversary of the riot at the Capitol today with a blistering critique of Donald Trump. In a speech, the president will warn of the dangers of misinformation and subverting democracy. He'll also call on lawmakers to pass voting rights legislation. Russia and its allies will send troops to help quell protests in Kazakhstan. The demonstrations are seen as the biggest threat to the former Soviet republic's leadership in decades. Thousands of protesters have taken to the streets and killed several law enforcement officials. Meanwhile, dozens of demonstrators have been killed by security forces. The riots were sparked by an increase in fuel prices. In Australia, tennis star Novak Djokovic remains in a hotel while his lawyers try to overturn the decision to deport him. Federal officials overruled a state vaccine exemption for Djokovic that led to a national uproar. He is in Melbourne for the Australian Open tournament. There will be a showdown at the Supreme Court Friday over President Biden's push to vaccinate millions of workers. Justices will hear arguments on 2 administration rules. One demands that 80 million workers get vaccinated or regularly tested. The other requires shots for workers in facilities that receive government health care funds. Business groups and Republican-led states are opposed. And in France, the nation's privacy watchdog has hit Google with a record fine of $170 million over the way it manages cookies. Facebook was penalized $68 million for the same issue. Authorities told the companies to come up with a way for users to refuse cookies that's as simple as the existing means of accepting them. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
best of financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
What do we know and what don't we know? Because there's a lot of speculation, a lot of anecdotes circulating right now.
Omicron definitely has the characteristics to create us concern for many reasons. But also we have been preparing for a moment like that for months right now. And I feel comfortable that the playbook will work. So what is the playbook? One, it is to understand more about this virus. The second, of course, will be to protect against infections. And the third is to treat. Let's take it one after the other to understand. I think there are a few things that are not very clear yet with Omicron. One, it is the clinical manifestation of this new variant. Is it creating more severe disease or not? Is it transmitted easier or not? Is it going to younger or older people? All of these are things that as we see clinical cases coming out and the numbers are getting bigger, that's something that we will know in a few weeks.
Protesters breached the Capitol.
Democracy has prevailed.
A flash mob decided to take on the shore.
Giant container ship blocking the Suez Canal.
1,000 new types of crypto coins.
Crackdown on tech in China. In the billionaire space race.
The Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Songs, you lie.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
I don't see the U.S. economy settling into a higher inflation regime whereby we continue to see inflation high in the, say, 5% range and wage growth accelerating in that direction. I think that as we move through the rest of the year, we're going to see cooler core inflation, cooler headline inflation. It will take some time for inflation to come back down around below 3%.
Gregory Staples there, the chief U.S. economist at Oxford Economics. From New York with Tom Keene, Lisa Abramovich and Jonathan Ferro. Here's your market, your price action after yesterday's big session, that big move lower on the NASDAQ. We add to it, down another 53 on NASDAQ 100 futures, off by about 1/3%. We settled down on the S&P, +4, up almost 1/10%. A little bit later, some economic data, 195,000 is the estimate for initial jobless claims. That comes in about 1 hour and 12 minutes time. Tom, this line from Peter Bokvar this morning. Is it even worth having the discussion now about a shrinkage in the Fed's balance sheet while they are still growing it into March? A lot of people feel the same way, Tom, about that discussion.
I strongly agree with the point. I think there's a lot of parlor game here. There's a lot of analysis of glide paths and vectors, John. And to Mr. Bokvar's point, there's dynamics going on of the in and out of flows, but also dynamics of the data, including the well-behaved claims report at 8:30, folks. And then on we go to a really nuanced jobs report tomorrow. John, are we still at 1 million Ian Shepherdson for Friday?
I can double check, Tom, but the last time I looked, yes, we were. 425 is your median estimate. I can go through the high and the low for you. The high is 850 now. The low is 150. So 850 is Ian Shepherdson at Pantheon. So we've come in, Tom, from 1 million to 850.
Yeah. It's amazing how he does that, folks. John Ferro, so gifted at the Bloomberg terminal in ECO. Right now, gifted at the Russell Building in Washington is Anne-Marie Horton, who joins us on an emotional January 6th. Anne-Marie Horton, the Russell Building is Richard Russell of Georgia of 1972 vintage. It is forever a changed capital, forever a changed Russell Building. What will you look for today in the moment of this January 6th?
Well, Tom, I think today is really going to be obviously about what the president is going to say, how he tries to unite the country in this very polarized moment a year on from January 6th. Also, many here notice, of course, that his own party has been quite fractious. So this is a moment for him to really ignore what has been the divisiveness within his own party when it comes to economic policies and COVID, also rising inflation, and really get back to the heart of why he wanted to run, which is what he had called a number of times in his campaign was a battle for the soul of the nation. And then, of course, what the other side will be doing, and that is, of course, the Republicans, especially given that former President Donald Trump was supposed to speak today from his Mar-a-Lago estate, but he is not going to be doing so.
Emery, how will the response be, or the different view, if you will, from the congressman from California or the senator from Kentucky? How will the Republicans respond on this January 6th?
Well, the Republicans are really trying to shy away from the spotlight, and you see that with the senator from Kentucky, as you mentioned, Minority Leader Mitch McConnell. He's actually set to travel to Georgia for the funeral of late Senator Johnny Isakson. And then, of course, you have Kevin McCarthy, the minority leader. While at the time, a year ago, he came out saying that what happened was wrong, and he did issue a statement saying as wrong as could be that January 6th insurrection of the Capitol and the riot, the breaching of the Capitol, he has no planned scheduled events. It's very much so, Tom, a political litmus test for the Republicans. If they are seen as going too far against the unsubstantiated claims of the former president, what does that mean for their re-election campaign? This is a midterm election, and just take a look at Representative Rice of South Carolina. He voted for the impeachment of former President Donald Trump. Tom, he now faces 9 opponents as he tries to seek re-election.
Anne-Marie, I do wonder how much the attention is split in Washington, D.C. The domestic issue is very much at the forefront because of the momentous day of January 6th. But overseas, as we were talking about yesterday, and you rightly pointed to the likely Russia intervention, we're seeing Kazakhstan actually receive troops from Russia, from other Eastern European allies. How do you read this in terms of Russia's involvement and how this affects the geopolitics of the time?
Well, as I think we all pretty much foreshadowed yesterday, what was going on in Kazakhstan was really going to be pivotal for the Kremlin. And what is the response for President Vladimir Putin, an individual who has amassed at least 100,000 troops on the Ukraine border? He now has to deal with a crisis at his southern border. And that means sending troops into Kazakhstan, which we saw happen overnight. I believe that going into the talks with the United States, this makes it much harder for Russia because they are now dealing with a crisis. At the same time, they were trying to really use those troop buildups in Ukraine as a leverage for the security talks with the United States as well as with Nord Stream 2 for Europe. So this, I think, puts a little bit more pressure on Putin and really, I think, weakens his hand slightly as the Kremlin goes into those talks next week with the United States.
How much is this a play for uranium?
That's a great question. I read yesterday someone was calling it the Saudi Arabia of uranium for Kazakhstan. And this is why not just Russia, but China as well will be keenly looking at Kazakhstan. You know, we don't really talk about Kazakhstan all the time, but when it comes to commodities, it is really a bread and butter country. It is not just uranium, wheat, oil, gas. When Russia is lower on gas and their stockpiles are starting to deplete, they look to their neighbor Kazakhstan to help them really start to get some of those flows going through Europe. So it is incredibly an interesting story, not just from a geopolitical lens, but also the economic lens as well.
AMH, thank you. Anne-Marie, our Washington correspondent down in D.C. Tom Keene, we hear from the president at 9 a.m. Eastern Time.
Well, we do at 9 a.m. It's going to be very important. This Tang, by the way, is great. Thank you for finally getting me some Tang here. I really appreciate that. It's going to be really important, John, to see what the president says in the tone. He's got to speak to a lot of different parts of America, and all of us within still the investigation that's ongoing.
It is ongoing. And Lisa, the midterms, where are we? 10, 11 months away?
honestly, how much cohesion is there right now in the Democrats? We hear about Build Back Better sort of being on the edge, and we look at economics notes. I've been really struck by how many are trying to game out what happens if they don't pass that bill, how much of a drag effect that would have on economic growth for the United States. So what can they actually achieve heading into that with the likes of inflation, the Omicron variant, Russia and Ukraine, all of these things percolating up?
You two having a good time, aren't you? In isolation. Tom with his tang. Lisa looks refreshed and ready to go. Of course, I'm joking. Lisa's in the house with about 5 kids right now. Chaos in front of her. I don't know how you do it, Lisa. I really don't. Lisa Abramovich and Tom Keene. I'm Jonathan Ferro. Equity futures unchanged on the S&P. Nasdaq 100 futures down 80, negative 0.5%. Again, that's where the pain has been. The epicenter for the price action in the bond market. Yields higher again, up 4 basis points to 174.40 on 10s and 2s, the highest they've been going back to spring of 2020. Your 2-year up 3 to 86 basis points. From New York, heard on radio, seen on TV, this is Bloomberg Surveillance.
Risk number 1, no zero COVID, and this is specific to China. Why is this the top one in 22?
Despite this massive case explosion with Omicron, the United States, Europe, the developed world is going to feel much more normal, finally, within weeks. But that is really not the case at all in China. They are trying harder and harder to impose strict quarantines, which is going to have big impact on their economy. And it's not going to work well, but Xi Jinping can't back away from it.
How much do you think there is a risk of that being extended globally in terms of supply chain issues and just a slowdown in general?
If they're shutting down cities, and that will include significant amounts of production, that means that we're going to continue to have supply chain challenges across the world in 2022. It also means that inflation has the ability to persist.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
What a start to 2022. Let's whip through the price action for you. Your equity market down just a little bit on the S&P, negative 0.1%. On the Nasdaq 100, down 88, and negative 0.6%. Yesterday, the biggest one-day move lower on the Nasdaq 100, going back to March of last year. A lot of this pain coming from the bond market, so let's work through it together. 2s, 10s, and 30s. Switch on the board and get 2 treasuries. Right now, your 2-year up another 3 basis points to 86, let's call it, on 2s. On 10s, 174. Just 3 basis points short of the high of last year on a 10-year yield, which was the end of Q1 21. Right now, 174, up another 4 basis points. So here's the conversation we've got to have. Big chat now, big debate about tighter monetary policy at the Federal Reserve. Over the last 10 years, the more this market expects an aggressive Fed, the less chance that this market actually gets one. You know how this works. Tighter financial conditions, the Fed backs away. Is that story different this time? So let's talk about financial conditions over the last 5 years. A picture of that, Tom, and I want to go back to the end of 2018. Just a classic example of financial conditions tightening and the Federal Reserve backing away. Now, we haven't seen a big amount of financial conditions tightening over the last few months. Let's be clear about that. We didn't even really see much of that yesterday. We got a little flavor of it. My question, TK, as we move forward, if we see more of that, if that's a flavor of things to come in 22, right, does it make it harder for the Fed to go, or is that the objective of this Federal Reserve?
And what's so important here, I'm going to explain this on radio, and Chris, keep that chart up behind John. This is one of the most important charts, folks, in the history of Bloomberg, invented by Michael Rosenberg. This was used, John, by the IMF within 10 days after its release. And to your good point, John, it's about the standard deviation move in financial conditions. And when I say jump condition, that's what we're talking about. Are we going to get a jump condition to tightness?
And ultimately, will that spook this Fed and lead them to back away? Or are things different this time around? The back end of 2018, inflation had a 2 handle. We're pushing 7 now. It's a very, very different story. In and around 2% to be precise to the back end of 2018. Right now, in and around 7%. Is that the change? Does that make it harder for the Fed to back away if financial conditions begin to tighten? A debate for 2022, that's the story for me. Let's get you some single names, some movers this morning. We can check in with Bloomberg's Romain Bostic. Morning, Romain.
Hey, good morning, John. And yes, that debate, we had it all day yesterday here, the comparisons to 2018 and whether this time really is different. You talk about the sell-off yesterday in tech stocks. That is continuing here in the pre-market. Not as severe as what we saw yesterday, but still notable. Tesla down about 1.8% right now. And a lot of those second-tier tech stocks, the one with those high multiples and in some cases no earnings to speak of, Digital Turbine, the big mobile platform, down about 2.3% here, down for about a 5th straight day. And even a lot of the biotech stocks, keep an eye on those. Gilead Sciences setting up right now for what could be a 6th straight day of losses here, down about 1.2%. We should point out a downgrade on Gilead also this morning over at Morgan Stanley. However, it's not all gloom and doom out there. You flip up the board here and you take a look at some of the names that are higher. Remember, bank stocks started out the year strong. We had 3-4% gains on Monday and Tuesday. They got caught up in the sell-off yesterday, but they're recouping most of those losses, at least based here in the pre-market. Bank of America up about 1.7%. JP Morgan, Citigroup, all of the big banks are also moving higher by about 1 or 2 percentage points. Even some of the tech stocks like Meta Platforms, Facebook, up about 0.1%. You're seeing some of those large cap cohorts start to get a modest bid coming in here. And then Walgreens Boots Alliance. You talk about fundamentals. Everyone says, okay, well, in the face of tightening financial conditions, how do stocks hold up? Well, the stocks that actually have good earnings, multiple margin expansion, and decent revenue growth, those are the ones that are going to get bids. Walgreens Boots Alliance had earnings out this morning, a beat on fiscal Q1 results, and they raised their guidance here for fiscal 2022. Those shares up about 2% here in the pre-market, Tom.
Romain, thank you so much. I greatly appreciated that quote on Meta Platforms. You're going to be Meta Platforms. I'm going to have to get used to that. Meta Platforms. Right now, he's very meta. We are thrilled to bring you someone with a lot of experience and looking at why the way yield moves and price moves. Gregory Staples joins us. To say he's with DWS, barely described his career out of Columbia Economics with Mutual of New York and also with Deutsche Bank with a tenure of duty there as well. Greg, honored to have you on with us today. Buried in your note is the shock of shocks. This is something John Farrow's provided leadership on within the media, and that is the German yield and the idea that we may finally get a positive 10-year German yield back to the normality of early 2019. What will that signal to Europe? What will that signal to the fixed income markets?
You know, Tom, thanks for the comments. It's going to be pretty tricky. What's interesting today, of course, is that the global sell-off in rates that started in the U.S. seems to be spreading globally. And yes, indeed, the 10-year Bund was last trading positive, I think, in April of 2019. We're within a stone's throw of that right now, and we think it truly gets there. You know, until the ECB actually starts to move away from their PEPP program and their APP program, they're actively doing quantitative easing, it's going to be hard for European fixed income rates to go much higher than that. My money is going to flow into the higher yielding U.S. But I do think that there's a potential for a basis between U.S. 10 years and 10-year Bunds to go as wide as 200 basis points. You know, right now we're maybe at 175, 180,
right.
And certainly there. Much north of that, it's going to be hard because of the flows coming out of Europe into the United States.
This is so important, folks. It's not as simplistic. The dynamics here, not the static analysis, the dynamic analysis. What is the behavior, Greg, as we move to a higher yield regime? Describe those flows in the decision tree that people make when they step into the market given higher yield.
Well, from a global perspective, of course, the question is, do they want to take currency risk? And the currency hedging component of it is very significant. You're not going to go naked currency if you feel like you're going to give up on the currency trade, which you get on yield. So far, it's actually been pretty positive. You're able to still invest in U.S. dollar and hedge your currency risk and come up with something that's considerably above what you're getting from global rates. So I think as long as that holds, it's going to suppress the U.S. rates from going too high too quickly. I think what's interesting over in Europe is they're not just facing higher inflation, but obviously underneath that, support for the Italian government deficits. It's not as if the ECB can immediately step away from their programs, because if they do, they potentially put Italian BTPs into some risk as to who's going to take that debt down as well. So the flow is, where do you get the highest yield globally on a currency hedged basis? Right now, that's the United States.
Greg, can you walk me through your expectations for the ECB, say, against the Federal Reserve? This Fed looks like it's ready to go in March. Does that make it harder, easier for this ECB to wait?
I think it makes it very much harder. I mean, I think inflation is still rising over in Germany. We saw some prints today that make you think the economy there is coming out pretty strongly. So the code for the ECB for so long has been continue to support the markets with open market purchases, continue to have a negative policy rate. They're going to be under some considerable pressure in 2022 to lift the PEPP. I think that's going to happen in March. And then the question is, to what degree do they taper down their open market purchases going forward under the APP program? I think they've got to consider accelerating it, given what the Fed's been doing.
4 basis points away from that zero level on a German 10-year. As you know, Greg, just the experience of us all over the last 10 years looking at European debt markets, it's what happens in Italy that counts here. Now, in America, we're talking about the prospect of tighter financial conditions and the ability or inability of the Federal Reserve to step back. Does the ECB have any capacity to maintain easy financing conditions for places like Italy? And do they move away? And ultimately, does this European bond market trade like a sovereign or a credit, Greg? Which one?
Within the Euro, that's a very good question. To what degree can they pull back and not destabilize the periphery, Italy in particular? And it's going to be difficult to do. I think it's going to be a mix of the two. Obviously, there's the sovereigns in the northern countries. It's the sovereigns as they try and nationalize the debt and some of those programs that they instituted after the COVID spread through there last year. But there's still concern about what Italy is going to be able to do if indeed the ECB pulls back from their purchases. That part of the market becomes a credit market, and it's one to watch very closely.
Greg, good to catch up, sir. Greg Staples there of DWS Group. Tom Keene, you and I have been talking about this for a long time. The ECB is working through this bond market for a long time. We can talk about a Federal Reserve backing away. What happens with treasuries? We can talk about a Federal Reserve backing away. What happens in Europe and ECB? Maybe they do the same. What happens in Germany? Tom, you know, what happens in Italy has been setting the guidebook, the playbook for this ECB for a long time. Can they back away without causing a problem on the periphery?
Yeah, I totally agree. And I just want to say, folks, what you just heard there from Greg Staples, this is why we do this. This is Global Wall Street at its finest, showing the dynamics of the moment. And John, I think you're absolutely dead on that Italy, with its odd economy, to be honest, odd economy, and its peripheral but not peripheral nature, is a brilliant litmus paper for Christine Lagarde of her optionality And Jerome Powell across the pond, to say Megan Green would talk about, is got to be aware and sensitive to Lagarde's choice set forward. And again, Italy is that litmus paper.
It's just so difficult, Tom, because when you're managing a bond market, if you manage just the treasury market, you understand the characteristics of treasuries as a central banker. When things get bad, people buy them. Things get better, people sell them. That's typically the way that sovereign debt markets work. If you're at the ECB, you're operating with bond markets with very different characteristics, Tom. A pure sovereign like Germany, or maybe a hyper-sovereign, given how it responds to bad news. And Tom, in Europe, in Italy, a very different story. I'd almost call it a hybrid, somewhere between a sovereign and a credit, just in terms of the characteristics of that market. When things get bad, people don't gravitate towards BTPs, they step back from them.
And even with characteristics of EM and also the political overlay, including the French election, what I would point out, John, and this is really important to our radio and TV audience, this is far more nuanced than the simplistic stuff you hear each and every day. And Staples absolutely nailed that coming off of the David Folkerts Landau School at Deutsche Bank, John, to say that this is way more nuanced than it used to be.
I totally agree. Your 10-year in Italy, for anyone that's following, up 8 basis points this morning to about 130.
Oh, I am, thank you.
On 10s, on BTPs on my screen right now. Over in Germany, up 4 basis points on a 10-year, just short of zero, negative 4 basis points right now. Tom Keene, you get comfortable. With Lisa Bravitt and Jonathan Ferro, your equity market down 2 on the S&P, down 81 on the NASDAQ, down 0.5%. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden is preparing to blast his predecessor today in a speech marking the one-year anniversary of the riot at the Capitol. The address will include a blistering critique of Donald Trump. President Biden also will call on Congress to pass voting rights legislation aimed at heading off changes sought by Trump loyalists in state governments. In Chicago, public school classes have been canceled for a second day in that dispute involving the teachers union. Teachers voted to shift to remote learning, and the school district called it an illegal strike. The union and school officials can't agree on issues such as COVID testing. In South Africa, there's an indication of how the latest stage of the pandemic may play out globally. The number of excess deaths from the Omicron-driven wave of infections has peaked at a fraction of the numbers seen in outbreaks caused by other variants. South Africa was the first country to be hit by the Omicron. And the judge in the Ghislaine Maxwell sex trafficking case will consider whether there should be a new trial. U.S. District Judge Allison Nathan wants to be briefed by lawyers over press comments made by a member of the jury. The juror said he told others on the panel that he was a victim of sexual abuse. Maxwell's lawyers say that shows the jury wasn't impartial. Concern over security is what holds institutional investors back from putting money in crypto and digital assets. That's according to a survey from Europe's largest regulated digital asset hedge fund manager. The report from Nickel Digital Asset Management found that security beat out concerns about volatility and regulations. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
November's jobs report was a mixed bag.
The change in non-farm payrolls comes in only half the level level we anticipated.
If you looked at unemployment, it's a fairly decent report, isn't it?
It's a terrific report.
How will Omicron show up in the final look at 2021 jobs?
COVID is clearly an issue.
The number one risk is a pandemic.
There's going to be a bit of a roller coaster ride.
Tune in for the December jobs report, Friday on Bloomberg Television and Radio.
When you think about schools in particular and children, where we've seen pediatric hospitalizations actually on the rise amid the spread of this variant, do you think keeping schools open is the right move?
If done well, school is a relatively safe environment for kids. Masking, tests, especially during the surge of cases, I think it is very important for kids to be in school, and I think the chance that school becomes an explosive source of new infections is low with precautions.
10 million cases in just a week. Are we reaching a peak of this wave, considering how quickly it is spreading through the population?
I think at a certain point it really has to slow down, and that's probably within a couple weeks or a few weeks away. And that's, I think, going to be good news. The question is, can we keep hospitalizations down enough during this period so we're not swamping hospitals?
Fragile is the European energy complex?
The European energy complex has been incredibly fragile for a number of months now, and it just seems to just keep getting hit with new crises.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
You've got equities, stretched valuations, the convexity at bonds, at a very, very high level. You have record dislocations in energy markets, metals markets, agriculture markets, and you still have a lot of money in the system. And then finally, you look at the investment positions in commodities, it's very low. What does that tell you? The best place to be right now, particularly given the Fed pivot, are commodities.
The often brilliant Jeff Curry there from Goldman Sachs, the head of commodities from New York City. Good morning. Lisa Bramage, Tom Keene and Jonathan Ferro. Your equity market down 5, negative 0.1% on the S&P. The NASDAQ 100 down 100, down 6 or 0.7%. Just keep an eye on the levels here, up 4 basis points on a 10-year to 174.58. High of this morning, about 175.11. High of last year, 177.42. That was the intraday high of 21. Here in 2022, Tom, the first week, 174.58 on 10s.
And correlated over to oil as well, with Brent crude at 82, up near that 86 level that we saw a number of months ago. When the Bloomberg was invented, and I remember it crystal clear, it was about duration and convexity in bonds. Kriti Gupta knows that the next thing that the Bloomberg accomplished was massive and instant correlation analysis, the relationship of two things, which just leveled the field in financial analysis. Kriti Gupta, you are correlating the fixed income market and oil today. What do you have?
I am. The fixed income and commodity market. I really want to talk about, as we talk about the Fed hiking perhaps more aggressively than previously stated, the fixed income market pricing in 3 hikes, just shy of 4. How does that ripple effect into stocks, into commodities? You saw stocks throw a little bit of a tantrum. Commodities actually ended up higher on the day yesterday, which brings me to my chart of the day. Tom, I believe you called this a red zone, green zone chart, but it shows you the 40-day correlation between the 10-year yield and the Bloomberg Commodity Index. Here's why this is moving higher, why the correlation is climbing, even as we start to talk about rate hikes and potentially inflationary pressures, because we have to consider, where is the inflation even coming from? It's coming from oils, from metals, from food. Jeff Curry earlier on Bloomberg Television during the London hour said that commodities are actually turning into an inflation hedge. So that is your bull case for commodities as you see the bond market really price in this more aggressive policy. Let me give you the bear case, though, and I'm going to piggyback on what Lisa said earlier, this idea that real yields are also climbing higher, which could actually affect some of that risk appetite that a lot of people have been going to commodities for, in particular, in the absence of yields and a real yield, I should say, and the stock market at these extreme valuations. Where do you go? And a lot of folks have gone to the commodity market for those returns. The question is, do you start to see that divergence once again as the bond market continues to march higher?
Kriti Gupta, thank you so much. And we'll continue this discussion right now with Michael McGlone. And yes, folks, I know many of you want to hear McGlone on Bitcoin. Damien from Turks and Caicos emails in and says, please ask him a question on BitDog. We'll see if we can get it in this morning. Michael McGlone, oil higher. How is this leg in oil higher different than the last leg in oil higher?
My thought about oil, Tom, and listening to Jeff is sold to you. I mean, the thing about oil is you've got to look at it right now, around $80 a barrel in WTI. It's just below that. That's the same price as 10 years ago. When oil collapsed in 2014, it's traded 50 every year since then. So this year might be the first year it doesn't get to $50 a barrel, but there's a reason it's half the price from the peak, and that is supply exceeds demand. Now, we've had this bounce, but it's within an enduring bear market. I'll leave you with one key fact about oil. Liquid fuel consumption in North America peaked in 2018, around 24 million barrels a day, and production in North America, which includes Canada, will probably reach 27 million barrels a day this year. So it's just going to be too much oil because the elasticity of supply. It's a key thing to remember about oil. And with Jeff's a friend. I'd love to take him for a ride in my Chevy Volt because, man, there's just a better way now to drive.
Well, Mike, there is an issue, though, of the cost of production, the fact that so many oil producers have not been investing as much in their infrastructure, and that this has led to a higher baseline cost for them. Not only that, but also a lack of production for certain oil-producing nations. What do you make of that argument?
Well, I love that argument because the leading pressure on oil for the last decade has been North America, most notably U.S. You can blame the U.S. Massive production, and let's go to natural gas, too. Look at natural gas, the same price as 1996. But in crude oil, the average cost of production in U.S. shale is below $50 a barrel. Last year, it got down to below $40 a barrel. Now, it's bumped up a little bit because they're opening up the less productive wells, but that incentive, a supply elasticity, the number one thing in economics is kicking in, and there's just money to be made. Now, you hear about ESG, but remember, there's a lot of independent oil producers out there in Texas that just can't wait to bring on this production, and all my data shows it's coming, yet demand has been declining overall. It peaked in 2018.
Well, Mike, can you elaborate on that? You said all your data points to it actually coming back online, and this has been one wild card, the shale patch, whether it will come back to the extent that it was in the past. What data are you looking at?
Well, it's on the terminal. I can show you some of the data, Department of Energy, but the key fact is, Lisa, it's pure economics. On a scale 1 to 10, what matters in commodities? Remember, I come from a farm. It's profits. And when there's profits, there's going to be supply. Now, when you talk about ESG on a scale of 1 to 10, what really matters? Maybe it's a 2 or 3, but that people are hoping that doesn't happen. And then you look at what happened with this recent Silverado, the Chevy Silverado, the electric one. It's off the charts. And the Chevy and the Ford 150 off the charts. I mean, the key fact is, most notably for North America, is demand's been flat for almost 20 years. It's now declining and supply is picking up, but it's the delayed effect of the higher prices. To me, that's what's going to kick in. And the key indication last year was when grain prices reached those high levels, they came right back because of supply, because of profits.
Mike, great work as always, buddy. Good to hear from you. Mike McGlone there of Bloomberg Intelligence on this oil market. Crude, 82 on Brent, very close to 80 on WTI, 79.24. And Tom, if you look at the charts over the last couple of months, that gap lower off the back of that Omicron scare didn't last very long. We filled that gap pretty quickly.
Well, it didn't last very long. And let's explain this, John, for mere mortals. Convexity is nothing more than physics envy by finance people over the word acceleration. And John, that's what we're talking about here. I think you've captured it very nicely, and I'm sure at 9 o'clock you'll continue forward the discussion as you listen to Bloomberg Radio. And the bottom line is what we're gauging now is not first derivative action, but second derivative acceleration, and what are going to be the various convexities in the coming days, given the shock of where we are.
Lisa, things happening very, very quickly. That seems to be a theme of our conversation through much of this morning.
And the other theme is energy a risk play? Is it something that is a trade, or is this something that's a supply-demand picture that's highly nuanced with respect to the investment in fossil fuels and the transition to the green economy? And that, I think, is the distinction that you hear, the tension underlying Jeff Curry's comments. Basically, he's saying, honestly, you have to have energy because that is the risk play that will hedge against inflation.
I love Jeff. Very fashionable, you know. TK, isn't Jeff the most fashionable guy at Goldman? Haven't we concluded that?
Oh, he's popular. It's purely a risk. Yes, I think he got Solomon to wear a pair of Balenciaga sneakers.
He used to turn up into the radio studio with us with those Balenciaga sneakers on. I was always surprised by that. Tom Keene, Lisa Bravis and Jonathan Ferro, your equity market just down 2 on the S&P, down 91 on the NASDAQ 100, down 0.6%. Yields breaking out another 3 or 4 basis points to 174. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan, bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
As the labor market continues to improve, we're going to see people come back into the labor force.
Even with higher wages, you won't drive inflation higher.
Inflation will come down, but from what levels? Bond yields have gone up a lot and fast. But most of that increase has been inflation expectations, not the real yield.
The Fed has such a difficult task ahead of them. They need to engineer a soft landing.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
This Fed is ready to go. From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your NASDAQ down again, negative 82 on the NASDAQ 100, down another 0.5%. Tom Keene, the Fed, it's ready to hike and maybe do a whole lot more.
Some nuance in there, I mean, around the silliness. And, you know, Mike McKee and I make jokes about this, John, but the language of the minutes is several, few, some, many. What several, few, some, and many did was shock the markets yesterday afternoon.
Shocked them big time, Lisa, and introduced this faster approach to balance sheet reduction as well. And Lisa, it's not lost on anyone. You and I have talked about it a few times this morning. Unbelievable we're having this conversation about balance sheet reduction as they're still buying bonds month after month into March.
Which is a reason why the likes of Peter Bukvar, who you highlighted earlier this morning, is basically saying, why are we even doing this? Because they're continuing to expand their balance sheet. There is a change, though, in tone. And how much will that change into action? How much does that matter? Because right now, a lot of people do not think that markets are priced for a Fed shrinking its balance sheet. You've said this before, John. Do you actually think that they'll go through with it? Markets seem to be saying probably not, and yet they're getting more nervous.
Tom, let's game this one out. If they'd wound up QE already, let's say they finished the taper, would January be in play? Never mind March, based on the communication we've had from them so far.
There's the parlor game, John, and I'm going to say they're data dependent, including, as Lisa mentioned, services ISM today, and also the jobs report on Friday. They're going to go tick by tick by tick based on the data. And one outcome to me, John, is that we get higher inflation for a little bit longer than the consensus. And that would be a shock to the market right now.
Andrew Hollenhorst of Citi joined us a little bit earlier on this morning. He's published just now his base cases for a hike in June, but he says a drop in the unemployment rate in tomorrow's jobs report would make March more likely. From New York, here's the price action. Let's whip through it together. We're down 3 on the S&P, just a little bit softer by not even 0.1%. The pain has been concentrated in big tech in the NASDAQ, down 95 on the NASDAQ 100, down 0.6%. The catalyst for that from the bond market, yields higher, 3 basis points on 10s to 173.69, and just 3 or 4 basis points from taking out the high of last year. Tom, that was 177 this morning, just a few basis points away.
It is, and there's a real market here going on, John. I really want to take a moment, John, to give people a vignette of John's and my life. When we're in London, and Lisa, you're going to love this when we finally get over to QVS, you roll down the hill to the Thames, John, and as you know, you're the one that took me down, I think, Dowgate Path, I'm not sure how to pronounce it, to that Greg's restaurant right down by the Thames River. They've got a changing of the guard today. You know I'm in triple leveraged all cash, John. You stood at that Greg's, as you explained to me, 96 levels of sausage pastry and said, buy the damn stock. It's gone £5 to £30 as they have bang-up earnings today and a changing of the CEO guard. Sometimes I should listen to you, John.
I convinced you, although to be fair, Tom, I did mislead you. I convinced you that that was a boutique London patisserie store. And you believed me until you started seeing them on every single corner as we made our way back to the hotel. Joining us now is Joe Quinlan, head of CIO Market Strategy for Maryland Bank of America. private bank. Joe, you say do not fear the Fed. Why, Joe?
Because the Fed is going to raise rates, John, as everyone knows, because the economy is strong. It's healthy. Nominal growth, double digits, that's good for earnings. So early in a Fed tightening cycle, equities perform well. It's at the end of the Fed tightening cycle is where you see the rolling over. So we're still constructive on equities, particularly where real interest rates being negative. So don't fear the Fed just now. The messaging is important, obviously. A little shock yesterday. But in general, I don't think yesterday really changed much in terms of the near-term outlook for equities.
I think we might have a problem with Tom Keene's connection. Tom Keene was meant to jump in there, Joe. At least he wanted to. So, Joe, I'll continue the conversation. A little bit earlier on this morning, we had this big debate about a tightening of financial conditions. Would the Federal Reserve back away? Would they need to back away? Could they back away? You know from experience, and the last time we saw a big shock like this was the back end of 2018. I'm not saying that's what we've got now. We've got a little subtle flavor of that. At the back end of 18, we had a tightening of financial conditions. The credit market in high yield seized up at a primary market, at least, Joe, and the Fed was able to back away. Before they've even fired a bullet, we're having this conversation already, Joe. Do you think this time is different, or is it the same story?
I think it's a similar story, John. I do remember that because it ruined my Christmas Eve. Remember that? The Fed was shocked there to the system. So, but I think this Fed pivots. You know, what the Fed has to do is what Ben Bernanke talked about. He said monetary policy is 98% communication, 2% action. So the Fed has to do a better job telling us what they're thinking, how they're thinking, give us kind of the roadmap so the markets can anticipate where they're heading next and have a clue. So I think there's similarities, but really, John, I go back to the fundamentals. Good nominal growth. We got the earnings season coming up. That's going to be gangbusters for a lot of sectors, particularly the cyclicals, energy. So I think that's going to kind of overwhelm and kind of be the focus as we go deeper into January.
There were some nuggets within the meeting minutes that we haven't discussed, including a concern about a flattening yield curve, this desire to have a steepening yield curve as an indication that perhaps the economy is on an upward trajectory. How much can that color traders' conviction in this reflation trade in the financials?
Well, Lisa, you're right. I mean, a flattening yield curve is not, that would signal some difficulties for the economy, but I think, when you look at overall monetary policy, it's still very accommodating here, right? I mean, that's kind of getting lost here in the narrative in the last, say, 12 hours or so. So I think, the overall policy remains accommodating. You're going to get another fiscal package out of Washington as well. So there's enough liquidity out there, even as we speak today, to continue to drive growth. And the curve matters, of course, but here near term, say the first half of this year, you want to be positioned in the cyclical value equities, buy the technology on the pullback, right? We're kind of talking to our clients like rebalancing. We're going to get an entry point for technology later in the first, say, second quarter, where you want to own technology, add your exposure. We're not there yet. Right. So we're really very much watching opportunistically where to put money to work on the curve and in equities.
Joe Quillen, I want to harken back to Phil Correa, the giant of Pioneer Group, working with John Kerry as well. And they always told me, these gentlemen of great experience, as you know, that there was always an underestimation of what high nominal GDP would mean for corporations. Most people breathing today have never enjoyed a high nominal GDP. Are we grossly underestimating the corporate oomph of the bright lights of nominal GDP growth?
Yeah, Tommy, you're right. We haven't seen nominal GDP growth like we've seen in the last, say, 12 months in decades. And people do tend to forget that. Corporations live in a nominal world, right? That's very important. And they can have operating leverage to control the costs. And when they control the costs, their earnings increase. So I think the markets are catching up to the fact that it's about nominal growth, the leverage companies have to work through the cost pressures, and it falls to the bottom line. So you're right. We've forgotten about it, but it's becoming more of a consensus narrative. And that's why we think equities continue to grind higher. CEOs love strong nominal growth. It gives them a lot of leverage, a lot of opportunities to work the bottom line.
Joe, can I just extend that to a different concept, just a different argument, a different conversation? What do you think the consumer will respond to this year as they sit for this year's pay negotiations in their annual reviews. Do you think 4 to 5% gets it done, nominal? Or do you think they look at that and they feel that that's not enough?
I think, well, John, a lot of our clients, have felt pretty good about being in the markets for the last 3 years. They know that's not going to continue. So they want to participate, stay ahead of inflation. They're working, we're looking to see more clients go into, say, commodities. But I think, in general, reversion to the mean at high single digits to dividend payers, that's where our clients are leaning. And they're expecting that, and they're okay with that. I mean, a lot of our clients, 3 years of double-digit returns, they can handle single digits this year as well.
Joe, thank you, sir. Joe Quinlan there of Merrill Bank of America Private Bank. Tom, I want to go back to that question because I think it was misheard on Joe's end. I just wonder what's going to make a difference to the consumer this year. Do you need a positive real hike in your income? Or do you think a sizable nominal increase of 4 or 5% will get it done for some people?
It harkens back to another era. What I will say, John, is there's a massive differential between the British experience and the American experience. There was an absolute conviction and belief in America decades ago that if there was inflation, you would get a pay raise. And that was shattered like it was in Britain in the 1920s and 30s. That was shattered here in recent decades. In America and the labor share, I don't think they've got the belief, John, that they're going to get the pay raise necessary to equate or even to prosper.
That's why consumer confidence is going to be a key feature for a lot of people in the year ahead. Very interested to hear from Neil Kashkari at the Minneapolis Fed, who was looking at those long-term pay negotiations and heard from some people that they were up to 7%. That got his attention. Not just a one-year increase, but a multi-year increase, an annual increase of close to 7%. That gets your attention. Futures right now, unchanged on the S&P, down 76 on the NASDAQ. Let's call it down 77. We're down 0.5%. Yields are higher by 2 or 3 basis points on 10s to 173.34. Heard on radio, seen on TV. With Lisa Brammett and Tom Keene, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Biden will mark the one-year anniversary of the riot at the Capitol today with a blistering critique of Donald Trump. In a speech, the president will warn of the dangers of misinformation and subverting democracy. He'll also call on lawmakers to pass voting rights legislation. Russia and its allies will send troops to help quell protests in Kazakhstan. The demonstrations are seen as the biggest threat to the former Soviet republic's leadership in decades. Thousands of protesters have taken to the streets and killed several law enforcement officials. Meanwhile, dozens of demonstrators have been killed by security forces. The riots were sparked by an increase in fuel prices. There will be a showdown at the Supreme Court Friday over President Biden's push to vaccinate millions of workers. Justices will hear arguments on 2 administration rules. One demands that 80 million workers get vaccinated or regularly tested, and the other requires shots for workers in facilities that receive government health care funds. Business groups and Republican-led states are opposed. And in Australia, tennis star Novak Djokovic remains in a hotel whilst his lawyers try to overturn the decision to deport him. Federal officials overruled a state vaccine exemption for Djokovic that led to a national uproar. He is in Melbourne right now for the Australian Open tournament. In France, the nation's privacy watchdog has hit Google with a record fine of $170 million over the way it manages cookies. Facebook was fined $68 million for the same issue. Authorities told the companies to come up with a way for users to refuse cookies that's as simple as the existing means of accepting them. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
protesters breached the Capitol.
Democracy has prevailed.
A flash mob decided to take on the short.
A giant container ship blocking the Suez Canal.
10,000 new types of crypto coins.
Crackdown on tech in China. In the billionaire space race.
The Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Sounds the alarm.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
From the worker perspective, a recent headline, you got Kellogg's Cereal Union says the latest agreement that they had was rejected. Deere had to finally make a union contract. How concerned are you about the longshoreman contract and union negotiations right now?
Well, we're some time away from that. The contract expires on the 30th of June next year, and both sides have told me that they'll sit down to the table and begin negotiating in May. These are always important discussions, and usually when the spotlight is on our industry. But there'll be some issues around wages. The industry is making a lot of money. The longshore folks would like to see that. Now, I don't speak for either side, but training and development of the workforce will also be key as robotics and automation are front and center. The workers cannot be left behind.
Yeah, but to that point, I mean, do you feel like the balance, though, has shifted? I mean, for so long, workers had a lot less negotiating power. Do you feel like the pendulum's shifting?
The International Longshore and Warehouse Union, which does work across 29 West Coast ports, is very strong and a democratic organization.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
How will pricing have to adjust or not as a result of your greener ambitions?
We ran a big survey around 32 countries. More than 30,000 people took part. And as you say, there was a big gap in between people that were worried about climate and people that were taking action.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The ability to live with the virus is the exact opposite of China's policy of zero COVID. And zero COVID will not work for them, but they're going to stick with it. They're going to be fighting harder and harder over 2022 to deal with the strategy that looked the best in the world back in 2020. And this year, it's going to be the worst.
Ian Bremmer there of the Eurasia Group. His view on the situation in China, still living in 2020. From New York City with Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your equity market down 64 on the NASDAQ 100. We're negative 0.4% there on the S&P, basically unchanged through much of this morning. In the bond market, yields are higher by 2 basis points, just off session highs of about 175 on 10s, 172.81 right now. And Tom, I know you're very focused, hyper-focused on what's happening in the commodity market. Crude up again, higher by 2% to 79.35, getting very close to 80.
In this hour, claims here in a moment, and stay with us through the morning on radio and television. I really can't say enough about the nuances of fixed income and commodities right now. Right now, a joy, and this is what surveillance is about when we invented it, to have Elizabeth Economy and Ian Bremmer with us a few days ago, and now to finish strong with Leland Miller of the Chinese Beige Book is what our expert conversation is about. Leland Miller, I've got fancy questions on the electrical rate of China, of cities and this and that. Forget about it. All we care about is in counting 29 days, there's an Olympics in Beijing. As you look at the Beijing Olympics, what's the key thing you are watching for politically for the Chinese elite?
Well, it always comes down to whether Xi is embarrassed or not. And no one wants to embarrass Xi because it's bad for their health. So they are going to be putting in restrictions that don't, on a level no one's ever seen before. They don't want any bad news. They're expecting some outbreaks, but I guess that means grabbing someone and throwing them in a room and for the next 14 days afterwards. They don't want bad news. The news coming out of the Olympics has to be the Chinese Communist Party ran a tight ship and there were no disasters. And so that's what they're expecting, and that's what they better see.
What is the backdrop of the Beijing economy, and for that matter, the larger Beijing economy, as we have these Olympics? Is it thumb up or thumb down on the animal spirit of the region?
Well, it's interesting you term your question that way because, the Beijing economy is looking a little bit different than the Chinese economy writ large right now. Usually you see, when we look at this from a regional perspective, you see the coasts having one type of performance and the peripheries having another type of performance. It's very rare that we see coastal provinces diverge dramatically, but that's what we're seeing right now. The closer you are to Beijing, the closer you are to Xi Jinping, the worse the performance is, the more the COVID crackdowns are, and it's really, really tight. Guangdong doing much better, Beijing not doing well at all. So I think this is in preparation for the fact that everybody's so nervous about the Olympics.
Well, and when you talk about the COVID zero policy, how does China ever realistically open its borders if they maintain it? And what's going to press its hand to finally give up?
Well, look, I think either, COVID gets brought under control on a global basis, and the pill works, some vaccine just cures COVID for the most part or turns into a seasonal flu, or the government gets past the Olympics, gets past the party Congress at the end of the year when Xi will get, recoronated for yet another term or life term. And then they have less to worry about. So maybe they open up a bit because they value the economic issues more than they do the COVID policy, zero COVID policy. So a lot of things can happen, but it's going to be very difficult to change course in the coming months, considering how important the end of the year is.
One of the reasons why I always love speaking with you, Leland, is you have the on-the-ground facts about the different economic policies that we hear from Chinese officials. We've heard that they are talking about easing policy. We've heard that they want to expand lending a little bit to support the development, the housing development sector as we see all of the turmoil there. You're saying it's not actually happening. Can you give us a sense of what is happening in terms of tightness of their policy?
Yeah, everyone's getting ahead of themselves because, 2021 was an extremely tight year. 2022 is a politically sensitive year. You have the Olympics, you have particularly the party Congress. So everyone sort of knows the policy isn't going to get eased one way or another, maybe mildly or not, and they're getting ahead of themselves. They want to be the first one to announce, whether it's a media publication or a sell-side pamphlet on Wall Street saying, look, easing's happening, look at easing. It's not happening yet. Now, do we expect it? Sure. They're going to have to boost sentiment sometime in 2022 if they don't like the data. Things are going to have to get better. But right now, we're looking at borrowing numbers, which are similar to the lows of 2021. We're seeing pent-up demand numbers, which are similar to the lows of 2021, which are the lowest levels we've ever seen in the history of the China Beige Book survey. So the idea, property too, we saw a little bit of easing in November and they reversed it in December. So this idea that people can say, look, there's easing going on because we expect easing, it's not happening yet.
Leland Miller, I want to go back to your work at Oxford, where the wonderful Steve Tsang is truly expert on the culture, the fabric of Hong Kong. If you were to advise our listeners and viewers who are Western banks, what would you say to them about where Hong Kong will be in 5 years and how they need to adapt?
Well, all the problems with Hong Kong, basically that it's being taken over by mainland China and becoming just another Chinese colony, have been exacerbated by COVID with these quarantines. And so, you can't talk to someone who's unless you're Jamie Dimon, you can't talk to anyone who goes in and out of Hong Kong and isn't being driven crazy with these quarantine rules. It's not a way to do business. So the island has a historically important position. Geographically, it's important, but there's no way that Hong Kong is going to be this important in 5 years. It's declining every year. It's becoming too Chinese. It's becoming too closed. It's too hard to travel to. It's a sad story.
Leland Miller, thank you, sir. As always, just fantastic insight into what's happening in the world's second largest economy, the China Beige Book. Leland Miller. Tom, it's bizarre for a lot of people. We have a diplomatic boycott led by the United States over the Beijing Winter Olympics. We have allegations by this administration and others of genocide by the Chinese Communist Party. We have the whole issue around the pandemic, the fact that China is still running a COVID-0 policy, the fact that many countries haven't been able to get health officials in the country to get sufficient access to work out what on earth has happened and how this started some 2 years ago. And yet we are still holding, Tom, a Winter Olympics in that country in about a month.
I think you're right, John. And what's so interesting here, and I don't have any unique wisdom on this. I've got my own personal experiences. Nobody cares. What I would say, John, is that when this breaks, it breaks suddenly. And I don't know the character of suddenly or the way of suddenly, but everybody's radar is going to be up. To my answer, we need to just speak to people with true domain knowledge like Leland Miller.
Well, to Lisa's point, and Lisa, I think you asked a good question, away from the politics of the moment around the Winter Olympics, how do they get completed? It's going to be really difficult given what the policy is right now in China.
Honestly, the idea that anyone carrying the virus is more infectious than the day before they get symptoms, how do they control this and test for this, seems pretty impossible when it's endemic at the rest of the world.
Lisa Brammitz, Tom Keene, Jonathan Ferro, initial jobless claims 5 minutes away. The estimate sub 200K. Yields going into that up 2 basis points to 172.46. Equities unchanged on the S&P, negative on the NASDAQ. On radio, on TV, this is Bloomberg Surveillance.
All that chocolate makes it to the supermarkets in time for Christmas. I'm James Walcock, and I got really curious how chocolate makes its way to the supermarkets every Christmas. So I came here to Nestle's distribution centre to find out how it works. Almost 120 lorries come here every day, and they drop off coffee, chocolate, Kit Kats, Toffee Crisp, you name it. If it's made by Nestle, it will come through here, and it will get sorted by machines who will then load it onto a monorail that runs right up and down the facility. Automated cranes, like this one coming in behind me now, then load all of the chocolate, storage, all of Nestle's goods into this big warehouse. It can hold up to 100,000 crates. And then after it's been sorted and stored, sometimes for months, it will then end up over here, where then lorries will then take it out to supermarkets up and down the country. You can see the entire process is done without people. Goods can come and leave, sometimes without ever touching human hands. It's one of the largest automated centres in the UK, and it opened during COVID. And this Xmas is its first big test, and so far, it looks like things are going well.
November's jobs report was a mixed bag.
The change in non-farm payrolls comes in only half the level we anticipated.
If you looked at unemployment, it's a fairly decent report, isn't it?
It's a terrific report.
How will Omicron show up in the final look at 2021 jobs?
COVID is clearly an issue.
The number one risk is a pandemic.
There's going to be a bit of a roller coaster ride.
Tune in for the December jobs report, Friday on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Seconds away from economic data in the United States of America, live from New York City on TV and on radio. Your equity market unchanged on the S&P 500 with your economic data. Here's Mike McKee.
A slight uptick in jobless claims last week, John, but nothing to worry about. 207,000. That is an increase from the 198,000 that was initially reported for the prior week. It has now been revised to well, let's see here. I'll come back to the revision. The numbers coming out slowly. Anyway, so not so bad on a jobless claims number. The other number that everybody was interested in is the trade balance, $80.2 billion. That is a significant increase or decrease, shall we say, a significant drop from the 67 the prior month. A little bit less than forecast was 81, but it does suggest that we did see a lot of imports coming into this country over the month of November. This is trade balance for November, as people try to restock their inventories, and that may be a drag on fourth quarter growth.
Looking at the number right now, 207, just short of the 195 we were looking for. The price action shaping up as follows. Your equity market, as you were, down about 58, call it 60 now. On the NASDAQ 100, down 0.4%. Looking to the bond market, Mike, yields up a couple of basis points to 172.81 on 10s, a move on 2s. Mike, you're always good for this. Good value. Looking back at how this market responded to a Federal Reserve decision on the 15th of December and how we responded to the minutes in the last 24 hours. As an economist, Mike, as a reporter on the economy for a long, long time, what was your response to that? Your thoughts?
Well, my initial reaction, and I think we're seeing it a little bit into the markets here, is that it was a knee-jerk move by the markets. They were taken by surprise, and they tried to readjust very quickly on the fly, and some of that is coming off today. We do know that the Fed is likely to raise rates, and so the question then became when. There was a significant bet that March might be the first move, and now they've increased the bets on that. But a lot of this is going to be data-dependent going forward. And of course, there's some big data tomorrow that will have an influence on all of this.
Michael McKee, Jim Bullard of St. Louis is not Neil Kashkari of Minneapolis. We won't go into the details and nuances here, but Kashkari as a dove has made quite a splash. Jim Bullard has to respond to that and speak for a certain part of our Federal Reserve System. How do you expect Bullard to adjust to the Kashkari comments?
Oh, I don't think he does a whole lot, Tom, partly because they don't comment on what each other say. But I think Jim Bullard has been all along something of a hawk on moving rates higher or normalizing more quickly. He is more concerned about inflation. But now Kashkari has joined that chorus and suggests that, yes, we do need to take care of some inflation. And that just tells you the Fed's in a different place than it was a couple of months ago. The data have surprised them. Jay Powell told us that after the December 15th news conference, and they are prepared to act more quickly than in the past. And that is going to be significant for the markets because the Fed is basically saying, don't count on a gradual, slow rate move and a very delayed balance sheet reduction. We could do something at any time.
Mike McKee, looking forward to you leading our coverage tomorrow of payrolls in the United States of America. Full coverage, of course, as always, on TV and radio. In advance of that coverage, Tom Porcelli joins us now, the chief U.S. economist at RBC Capital Markets. Tom, I just want you to spend a moment to describe how strange this moment is for this Federal Reserve. A conversation about accelerating balance sheet reduction, just as they're still building up the balance sheet and buying bonds through March. Tom, make sense of it all for us.
Yeah, well, first of all, good morning. Good to see you all. Look, I would say that is it strange? I mean, I think we all need to keep in mind something. We have a sample of one, right? I mean, in other words, they did this one other time. It's not like we have a rich history of, hey, this is how it's happened in the past. I mean, they did it one other time. And that one other time, I think, was wildly different in terms of the economic backdrop than what we're enduring right now. And I think that's the difference. So it may seem like stark contrast, their approach, but so is the economic backdrop. So I don't know that we should be so overly surprised by this.
Well, we should be looking at the data. That's what they say, although it's unclear what data they have been looking at for the past 6 months that suddenly led to their pivot recently. And as we march toward that jobs figure tomorrow, as we march toward the jobs figure tomorrow, I do wonder if there is a threshold at which, if the participation rate does not increase or the jobs number is a very big one, if that could actually force the Fed's hand earlier, or if it's not necessarily going to be that impactful.
Yeah, look, it's a great question, and Lisa, I think the way you framed it, I think, is perfect. Or the way you set up this question is perfect. Look, I think we all sort of appreciate, or hopefully we all appreciate, that the payroll report has been plagued by seasonal adjustment issues or sampling issues, whatever the issue might be. I think we all recognize that there's some bit of additional quirkiness to what was already a pretty quirky report. What we do know is that ADP just printed 800,000 jobs, right? An assortment of different labor market metrics, including the claims data that just came out, continue to drive home that the labor market is tight. There's really no other way to get the sort of the meaningfully higher wage profile that we have in place than to have a really tight labor market. So with all due respect to tomorrow's report, I don't know that it really makes a difference in the world. I think what we know is that the preponderance of data from the labor market perspective really drives home tight labor markets are here, wage pressures will continue, and I think that's the thing that will keep the Fed engaged in part.
What you just said is so important. Do you think that markets are underappreciating how much wages you think will rise later this year?
Yeah, look, one of the things that we've said, and we just wrote this in our year ahead, is, some of the pressure that we're seeing from a wage perspective will actually ease. Now, I want to be clear on what that means, right? A nuanced idea. We're running right now, if you just, there's countless measures of wages. One of them is average hourly earnings. I happen to hate that measure, but everyone seems to know it, so let's talk about that. That right now is running at around a 6% pace. What we think happens as the year progresses is, look, it's going to be a slower growth year. It's still going to be a really good year, but it's going to be slower growth versus last year. And so what we expect is going to happen is that some of the heat will come out of the job opening space, which will take some of the heat out of wages. Wages will still remain elevated. I want to be very, very clear on that. But they're not going to be running at a 6% pace. We think that they'll probably be running closer to a 4 or 5% pace. Again, I think that that's a very important nuanced idea that needs to be sort of understood. You're still looking at a really good labor backdrop, labor that's going to tighten over the coming year relative to where we are now. But think about this payroll report, right? This is, again, another great example. We have been printing assuming the number comes in close to what we're predicting for tomorrow. We averaged 550,000 jobs per month in 2021. Which is a staggering number. Obviously, given what has happened, it's not that surprising. But as we look at 22, you're not going to average 550,000 jobs. You're probably going to average half of that per month over the year. So I think that's again another important way of thinking about where we are from a labor market perspective.
Tom, your initial acclaim was on analysis of the wage growth and the many wage growths of America. What's the character of our wage growth this time around? When you look at labor's ability to negotiate a higher wage, the almost social aspects of it, what's the character of our 2025 wage growth?
Yeah, so, one of the things that, as I look at 2025 is a little too far for me to forecast, but in the current, in the sort of the current context and over the course of the year, and I think even into next year, I think is very fair. One of the things that's been very interesting is if you look at the sort of the wage pressures that are in different segments of the labor backdrop. And there's, again, countless ways of capturing the essence of that. I think one way of looking at that is to look at job leavers versus job stayers. And I think this sort of dovetails with the conversation you all were having a little earlier. It's interesting to see, right? It's, do people have the ability to sort of demand more from a wage perspective? On the face of it, they do. Because if you look at what job leavers people that leave a job to take another job. If you look at their wage rate in percentage terms relative to job stayers, so people who stay, the leavers are their wage rate is running a full percentage point more. So I do think that there's real scope for wage pressures to remain fairly elevated in the context of, again, everything that we're talking about. You are going to have a tight. It's not like we're waiting for a tight labor market. It's already here, and I would argue it's been here. It's something we've been talking about for quite a number of months now. I mean, we put out quite a number of metrics that show some internal metrics that really show that labor market is tight, and we expect that will remain that way over the balance of the year. So I think there's real scope for wage pressures to remain incredibly buoyant, even if some of the heat comes off of it relative to where we are now.
Tom, you produced some of our favourite research on the economy here in America. Thank you, sir, for being with us. Tom Porcelli of RBC Capital Markets. Going into that print tomorrow. On claims this morning, we came in at 207. Tomorrow on payrolls, the estimate 433 right now. Just caught up with Ian Shepherdson of Pantheon. Tom, over at Pantheon, he's looking for 850. He says 850. We expect the initial print to be revised up to about 1 million. Forecasting payrolls during COVID is a nightmare, but the risk to the 424 December consensus, he says, Tom, is clear.
You know, it's interesting here, and again, the revisions to me, John, going back 2 months at least, are always really important. What it comes down to is a fully employed American. We've had a number of guests today really speak of that. I think Joe Quinlan was quite articulate on that, of a fully employed America. But then there's a social aspect of a huge part of America, John, not participating.
And who haven't participated either, Tom, in this equity market too. On this equity market, Chris Harvey, equity strategy head at Wells Fargo Securities, joining us at around about 9 a.m. Eastern time on the open. This guy looking for 47.15 on the S&P 500 at the end of this year. Right now on the S&P at a close yesterday, 4,700. That conversation coming up shortly from New York, on radio, on TV. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden is preparing to blast his predecessor today in a speech marking the one-year anniversary of the riot at the Capitol. The address will include a blistering critique of Donald Trump. President Biden also will call on Congress to pass voting rights legislation aimed at heading off changes sought by Trump loyalists in state governments. In Chicago, public school classes have been canceled for a second day in that dispute involving the teachers union. Teachers voted to shift to remote learning, and the school district called it an illegal strike. The union and school officials can't agree on issues such as COVID testing. In South Africa, there's an indication of how the latest stage of the pandemic may play out globally. The number of excess deaths from the Omicron-driven wave of infections has peaked at a fraction of the numbers seen in outbreaks caused by other variants. South Africa was, of course, the first country to be hit by Omicron. Shares of Bed Bath & Beyond are fluctuating in pre-market trade. The chain reportedly quarterly sales that missed analyst estimates. Bed Bath & Beyond also cut its outlook for the fiscal year, citing lack of inventory and supply chain stresses. Concern over security is what holds institutional investors back from putting money in crypto and digital assets. That's according to a survey from Europe's largest regulated digital asset hedge fund manager. The report from Nickel Digital Asset Management found that security beat out concerns about volatility and regulations. Global News 24 hours a day management found that security beat out concerns about volatility and regulations. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
mentioned the 1.5 million tests. That's quite a feat. At the same time, I've seen estimates that say that'll get you through about a week or so. What do you do after that?
Let's be smart with our resources. Why not use the tests strategically when you need them? How are we using them? A child is diagnosed with COVID in a classroom. We give that entire classroom take-home test kits so their parents can test them, so we can determine if we should close down the school or just the classroom, or what we should do with that particular facility area. What has happened in the past, you had one diagnosis, we want to close the entire school. That just makes no sense. Instead of using our resources in a strategic fashion, the science has shown just because one child has COVID in the classroom, it doesn't mean the entire school or the classroom is infected. We're going to be smarter, and we're going to pivot, and most importantly, we're going to defeat COVID.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The code for the ECB for so long has been continue to support the markets with open market purchases, continue to have a negative policy rate. They're going to be under some considerable pressure in 2022 to lift the PEPP. I think that's going to happen in March. And then the question is, to what degree do they taper down their open market purchases going forward under the APP program? I think they've got to consider accelerating it given what the Fed's been doing.
A brilliant discussion with Gregory Staples of DWS, just wonderfully nuanced there about the bond dynamics of the United States and particularly Germany. I just can't say enough about that. Look for that out on Bloomberg Digital. Lisa Bramowitz and Tom Keene, John Farrell getting ready for a 9 o'clock market open and a speech by the president. We'll touch on that here in a bit. Right now, continuing our review of Ian Bremmer's Eurasia Group's top 10 risks is, well, we all know it's a risk, and that is Turkey. But what we need to do, as we spoke to Leland Miller on China, is speak to someone that knows the terrain of Ankara and Istanbul, and that is Emre Peker. We're thrilled he could join us right now with Eurasia Group, and I should note is award-winning as a finalist Pulitzer Prize 2016 on the events of 2016 for Mr. Erdogan. Emre, how is now different from Erdogan's challenges of 2016?
Thanks for having me on, Tom. I think the primary difference is that this is now an existential fight for Erdogan. He has no option but to win, and all the odds are stacked against him. Public opinion, economic performance, unemployment, inflation, declining investor appetite for Turkish assets. Given all of these, I think we're headed for a very turbulent 2022 as Erdogan tries to prepare the grounds for re-election in June 2023.
It's been called a neo-Ottoman vision of his foreign policy, his projection across the Levant, even over as far as Egypt and Libya. Domestically, does he still have what I'm going to call neo-Islamic and traditional support, or is that fractured in this crisis?
I think it would be accurate to say it's been fractured, Tom. Essentially, at the end of the day, people care what happens to their pockets and whether they can put food on the table. And increasingly, over the past 6-9 months, that has not been the case. People are struggling to get jobs. People are struggling to bring food home. And this is chipping away and eroding very rapidly, actually, not chipping away, all the other sort of grandeur and adventures that Erdogan was able to carry out over the past decade, which enjoyed popular support. So these ideas of like a return of neo-Ottoman greatness is not really selling at the moment. And in terms of his Islamist agenda, I think we're seeing it play out in plain sight, especially with this fight against inflation rates and this desire to have a zero policy rate in an environment where inflation just spiked to 36%.
And a lot of people are talking about regime change and the likelihood that President Erdogan will lose control. Can you map out what that could look like and whether it will be distinct and much more orderly than what we're seeing, for example, over in Kazakhstan?
Thanks, Lisa. I mean, that's a very interesting question. There's a lot of speculation in the air in Turkey, in Ankara, where I was in mid-December. And there's a certain level of optimism that the next election is the opposition's to lose. And Erdogan is a goner and his 2-decade rule is over. And certainly you also get that sense among the investment community in London, in New York, and so forth. I think those are, at the moment, a little bit premature. Erdogan still has a lot of incumbent advantages. He still controls a lot of the levers of the state. And he still has some staying power with a good 15 to 30% of the population. And moving harshly against him, as we saw with the failed coup attempt in 2016, will certainly backfire. So the only exit that we currently see for Erdogan is through polls, and that would have to be a decisive loss in the next elections, both at parliament and for the presidency. In those terms, I think Erdogan is going to try and prepare the grounds so that he doesn't suffer a defeat or at least retain the presidency.
So given that, Emre, what's the broader geopolitical risk that Turkey presents for 2022?
I think it's more instability and another rogue actor in the region, Lisa, particularly as Erdogan looks to score some foreign policy wins to bolster his sagging domestic popularity. The primary risks we see would be coming from Syria, where Turkey has some legitimate national security concerns, but any overt action would piss off either the US or Russia or both, in which case Erdogan's hands would be severely tied. And another one, which is probably a little bit less dangerous for Ankara to play, would be tensions in the East Med, particularly against Cyprus in contested waters with hydrocarbon exploration and Turkey pushing for a two-state solution on the divided island.
Henry Pecker, thrilled to speak to you again, of course, formerly with Bloomberg News and now with Eurasia Group in their top 10 risks for this year. Lisa, we have to turn right now to the Congress and to the Statutory Hall, where the president will make a speech. Lisa, what are you looking for?
Well, he's going to be speaking about trying to unify the Democratic Party, about voting rights. He'll be talking about what happened a year ago on January 6th. I don't know how much he can use this platform to push forward his economic agenda, given the dissonance that we have seen in the Democratic Party. And honestly, the idea that it seems unclear whether the Build Back Better plan can actually get through this year versus last year's conviction that it was a done deal is a market shift, Tom.
No, the market shift for me is also that, the illusion here that he's really going to go after the former president of the United States. Lisa, that language will be delicate, to say the least, and we're told forceful.
Yeah, forceful. And of course, President Trump, former President Trump, I should say, has decided not to make a speech after being advised by his allies. Just, turning back to the markets, I do want to get a sense of this picture. We started the show with the real yield, and I want to just say that 5-year real yield, Tom, is extending its climb upward to a lesser negative 1.38%. To me, this holds the key to risk appetite. How quickly do we see a shift here as we start to think about a Fed that is not so comfortable with market conditions being as loose as they are?
And what is so important on that, folks, is the analysis of the inflation-adjusted yield across the maturity or duration perspective. The 10-year is what I'm going to call the vanilla, often quoted real yield. And Lisa quotes Pistachio this morning, what the pros really look at, which is the shorter-term 5-year real yield as well. Coming up, the President of the United States, our analysis by Anne Marie Horton and others in Washington, an important moment for this nation. Please stay with us on Bloomberg Radio, on Bloomberg Television. Good morning.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost. So it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We have got a lot to get through this hour. In just a couple of moments, you will hear from the President of the United States, 30 minutes away from the opening bell, with equity futures slightly positive on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Deep breath, get comfortable. A lot to get through the next 60 minutes or so after yesterday's whipsawing price action in this equity market. We need to work through what the Federal Reserve is guiding us through. We also need to hear from the President of the United States. We will hear from him any moment now. A fantastic panel going into the cash open. Chris Harvey, Keith Lerner, Elise Ossenbaugh with us to count you down to the opening bell and work through some of the issues we worked through just yesterday. Bloomberg's Anne-Marie Horden also over in Washington, D.C., just outside of the Capitol building on Capitol Hill. Anne-Marie, let's come first to you. Walk us through what you expect to hear from the President of the United States in just a couple of moments.
Well, Jonathan, he just made his way into the Capitol, and on his entrance, he was asked how he's feeling this morning. What is his mindset going in? And he said that he is praying that we never have a day like we had today 1 year ago ever again. And from the remarks that the White House has sent out, an excerpt of those remarks, he is going to talk about what kind of nation the U.S. wants to be. And he's really going to go back to that line, Jonathan, that was really purposeful in his campaign. What he said, the reason why he wanted to run was the battle for the soul of the nation. So even though there's been some not exactly the same page when it comes to the Democratic Party, factitious at points, and he struggled to really bring his own party together when it comes to legislation, today really he is going to talk about Democratic unity and also squarely put the blame on the former president, President Donald Trump, who canceled his remarks today, as his being the reason why and the perpetrator who really instigated what we saw a year ago today, a siege of the Capitol.
Anne-Marie, these issues over the last 12 months have become heavily politicized, as you know. For many people, that should not have been the case. Going into this year, the president going into last year promised to unite the country. Is that the promise again? And how does he navigate an issue like this one and achieve that?
Well, for a while, he would not always want to invoke the former president's name. This has been something that's overshadowed his first year of office. He was gearing up and preparing to make his speech, his inauguration speech, when this happened a year ago in January. And he has talked about trying to unite the country, but it is incredibly difficult because this is still a polarized country. Look at the polls about how Democrats and Republicans view what happened a year ago today. And for the Republicans, Jonathan, it's a very difficult situation. President Donald Trump has really painted this as a political litmus test. That's why many Republicans say, while you'll see a few statements put out, we heard from Senate Minority Leader Mitch McConnell, but he's actually not going to be at the Capitol. He's traveling today. A number of Republicans who came out a year ago talking about what happened at the Capitol and how terrible it was, and also criticizing their leader of their party, former President Donald Trump, are now shying away from that spotlight and really don't want to get involved because, Jonathan, it's all about politics. This is an election year. And at the moment, he is still hanging on as the leader of the party, and he's potentially tinkering with a 2024 run.
Anne-Marie, thank you. AMH down in D.C. Stay close on Capitol Hill. A little bit later this morning, you'll hear from the president. That should be moments away. Typically with events like this, you get a 2-minute warning. We haven't had that 2-minute warning just yet. We'll talk about the political volatility. We need to talk about the market volatility as well. Still with us, Chris Harvey, Keith Lerner, Elise Ossenbaugh. Elise, I want to come to you and talk about the market volatility sparked by this Federal Reserve and begin with a simple one. The difference between what you heard yesterday and the price action we saw and what we heard on December 15th and the price action we saw then.
So directionally, I don't actually think it was all that different. Certainly the minutes were maybe a little more hawkish than what we got in mid-December. But I think the important thing for investors to focus on is the fact that the Fed is responding to a strong economy that's in the middle cycle stages of, the current trajectory. We've got above trend economic growth. Obviously, inflation is very high, and we're dealing with a tight labor market. And so it's natural that the Fed, is poised to hike interest rates 2 to 3 times this year, but we don't think investors should respond with fear. really, we think investors should be responding with action. Review your passive allocations and consider rotating them into active managers to capture alpha opportunities across cyclicals and quality growth. Mind your duration exposure as interest rates rise, and don't forget about the debt side of your balance sheet. Right now is still a really great time to lock in low rates for near-term or even future borrowing needs.
Chris, to come to you on the equity market, we've talked a lot about that mount up you looked for at the back end of the year. We got that in some ways. For the S&P 500, we're back to 4,700. You're at 4,715 year end this year. Is this kind of Fed part of the story for you for the year ahead, Chris?
It really is. So what we've been saying is don't expect much this year. But do expect some sort of pullback, maybe a 10% pullback in 2Q, early in the summertime. And it's a combination of Fed and other issues. You're late in the cycle. And late in the cycle, funny things happen. And we're seeing a lot of speculation. But we're also seeing growth decelerating, a Fed that's getting more hawkish, and even more hawkish than many people think. And the last thing I would say is there's a mentality out there that the market can bend but not break. This year, the market will break at some point in time. We will have that 10% pullback. And at the end of the day, one of the mantras and the operative word for this year is we're going to see a normalization. Normalization of spending, normalization of values, and a normalization of volatility.
The market will break, and will the Fed break it? In those Fed minutes, this was a key quote. There were several, but here's one. Many participants judged that the appropriate pace of balance sheet runoff would likely be faster than it was during the previous normalization episode. Mike McKee's with us. Mike, you've worked through this. You worked through the last cycle, the one before that, the one before that, and the one before that, but we won't go there. A lot of people were looking for balance sheet reduction. The Federal Reserve Chair himself brought it up in the news conference. But here we are yesterday. This one seems to have got everybody's attention in a way that it did not a month ago, Mike. Why?
It isn't clear why. The Fed Chair, Jay Powell, was very upfront about all of this at his news conference, and all of the Fed dot plot and economic forecasts were made at that meeting. It may be that people confuse the idea of this time and last time. It was November they were reacting to, not December data and not Omicron data. And here's the point that Powell was making, and it shows up in the minutes again. The economy is a lot stronger now than it was back in 2015 when they began lifting rates. So they can go faster, and that's a reason that they made the 3-move in 2022 change in the projections. We'll get some numbers tomorrow that will probably cause the markets to move again, depending on how strong they are. The one that everybody will watch is the participation rate. How tight are labor markets, and what does that mean for average hourly earnings? Do they continue to go up? Then we wait for CPI next week. And the big issue for the Fed at this point, it seems, for the markets is not so much what they're going to do, because once people sit back and realize that they've already told us, you're starting to see some of this roll off out of the markets today. Then it's a question of tactics. And that's what really seems to have gotten people's attention yesterday. You look back at 2015 and you look at the difference between the bottom arrow there, when they started raising rates and when they started shrinking the balance sheet, almost 2 years. So that's going to come quicker. And then look at the stair-step way they raised rates, a quarter point every quarter or so. Now they're laying out the possibility of a quicker move higher if they have to. And that's an adjustment that markets are going to have to make. It's not been done before.
Mike McKee, thank you, sir. On the Federal Reserve, on the politics of the moment, we look back 12 months. Right now, you're hearing from the Vice President, Kamala Harris. We'll also hear from the President of the United States, Joe Biden. When the President steps up to that podium, we'll take his remarks. Keith Lerner, I want to come to you on the Federal Reserve. Typically, when a market starts to price in an aggressive Federal Reserve, that's exactly what the market does not get. Financial conditions tighten, this Fed backs away. Keith, is it different this time, given how different this data set is for this Fed?
It's somewhat different because of the backdrop of how much stronger the economy's been growing and how easy financial conditions have been over the last year, really close to a record low. Jonathan, our main thoughts headed into this year is positive yet realistic, and we've been thinking the Fed was going to inject volatility into the market. But I will say, we still think we could have somewhere between 6 to 12% gains this year. But when we look at really shallow pullback years like last year, the next year you tend to have an average or average pullback of double digits at some point during the year. but we're still overall constructive despite that, because one, you have an economy that's moving forward. Stocks have risen about 85% of the time when the economy is growing. We think we'll have low double-digit earnings growth this year. And then we also just got a technical signal earlier this week of really strong breadth. When we look back historically, we've had 29 signals. 28 times a year later, out of those 29 times, the market has been up. So overall, the primary trend is higher, but we have been preparing our clients for more moderate gains, and that history that tells us that volatility should pick up this year, and the Fed feeds into that.
Elise, can I come to you on that same question that I posed to Keith just there? The capacity of this Federal Reserve to back away from its intentions if financial conditions tighten. Is it different now compared to the previous cycle, with inflation close to 2 then and close to 7 now?
I think it is. You know, we need to unpack a little bit why people get so nervous when the Fed starts to tighten. And really, it tends to be because the market may, or the Fed may derail an economic expansion in the way that the market isn't necessarily pricing in. But if I think about our growth outlook this year, we're expecting a slowdown. We do expect growth to stay above 4%. For 2022, and then heading into 2023, we expect it to, trend even lower to more long-term average levels. But contrast that to 2018, when economic momentum was accelerating and the Fed started hiking. The reason I point that out is because this time around, the Fed is moving policy in a direction that aligns with the economy. And so as, growth continues to normalize and come down, that, I think, will give the Fed flexibility to signal more benign forward guidance that, hopefully the market will take in stride.
Elise Ossenbach sticking with us alongside Chris Harvey, Keith Lerner. Wonderful panel to respond to some of the price action and volatility we've seen in the last 24 hours. Going into the opening bow, that cash open 19 minutes away, futures unchanged on the S&P. The Nasdaq negative 0.5% after the biggest one-day loss on the Nasdaq 100, going back to March of last year. With some movers for you this morning, here's Abby.
John, well, there's really one mover to take a look at that suggests that the tech sell-off may continue, and that, of course, is Apple, the biggest weighting to the Nasdaq 100, the S&P 500, right now down about 0.8%, and it's pretty interesting in terms of the stock, the company hitting that $3 trillion market cap briefly on Monday, and then since then down. In fact, right now down almost 2% on the week. Two factors weighing, of course, the massive backup in yields, and then second, the growth for this company is estimated to slow to single digits for both the top and the bottom line this year, something that some folks may be overlooking. But if that happens, it could mean a correction for sure, and for the markets too, John. As goes Apple, so goes the market.
Abby, thank you. A name to watch going into the opening bow. Going into the open 18 minutes away, futures slightly negative on the S&P, much more negative, much more so on the Nasdaq 100. Coming up shortly down in Washington, D.C., you will hear from the President of the United States.
What do we know and what don't we know? Because there's a lot of speculation, a lot of anecdotes circulating right now.
Omicron definitely has the characteristics to create us concern for many reasons. But also we have been preparing for a moment like that for months right now. And I feel comfortable that the playbook will work. So what is the playbook? One, it is to understand more about this virus. The second, of course, will be to protect against infections. And the third is to treat. Let's take it one after the other to understand. I think there are a few things that are not very clear yet with Omicron. One, it is the clinical manifestation of this new variant. Is it creating more severe disease or not? Is it transmitted easier or not? Is it going to younger or older people? All of these are things that as we see clinical cases coming out and the numbers are getting bigger, that's something that we will know in a few weeks.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
To form a more perfect union, establish justice, ensure domestic tranquility, provide for the common defense, promote the general welfare, and secure.
You are listening to the Vice President of the United States, Kamala Harris. They're 12 months on from the Capitol riot 12 months ago. You'll hear from the President of the United States, Joe Biden, in just a few moments, in a couple of minutes' time. On Capitol Hill, Bloomberg's Anne-Marie Hordern, a Washington correspondent. We've heard from the Vice President in the last couple of minutes, Anne-Marie. What you've heard from her and what you expect to hear from the President in a couple of minutes' time.
Well, the Vice President, Jonathan, started off talking about where she was that morning of January 6th a year ago, and she was here at the Senate for a meeting, but she had left during the insurrection. But she said her hopes, her heart was with her staff, and she was so concerned about them. They had to use filing cabinets as they took refuge in their Senate office building. And then, Jonathan, she talked about the fragility and also the strength of democracy, how fragile it was that potentially the election was overturned, but that people came back and they made sure that those results got through, Jonathan. I believe now we will hear from the President of the United States, Joe Biden.
We can do that right now.
Americans, to state the obvious, 1 year ago today, in this sacred place, democracy was attacked, simply attacked. The will of the people was under assault. The Constitution, our Constitution, faced the gravest of threats. Outnumbered in the face of a brutal attack, the Capitol Police, the D.C. Metropolitan Police Department, the National Guard, and other brave law enforcement officials saved the rule of law. Our democracy held. We, the people, endured. We, the people, prevailed. For the first time in our history, a president had not just lost an election, he tried to prevent the peaceful transfer of power as a violent mob breached the Capitol. But they failed. They failed. And on this day of remembrance, we must make sure that such attack never happens again. I'm speaking to you today from Statuary Hall in the United States Capitol. This is where the House of Representatives met for 50 years in the decades leading up to the Civil War. This is on this floor where young Congressman of Illinois, Abraham Lincoln, sat at desk 191. Above him, above us, over that door leading into the rotunda, is a sculpture depicting Cleo, the muse of history. In her hands, an open book in which she records the events taking place in this chamber below. Cleo stood watch over this hall 1 year ago today, as she has for more than 200 years. She recorded what took place, the real history, the real facts, the real truth, the facts and the truth that Vice President Harris just shared, and that you and I and the whole world saw with our own eyes. The Bible tells us that we shall know the truth, and the truth shall make us free. We shall know the truth. Well, here is the God's truth about January 6, 2021. Close your eyes. Go back to that day. What do you see? Rioters rampaging, waving for the first time inside this Capitol Confederate flag that symbolized the cause to destroy America, to rip us apart. Even during the Civil War, that never, ever happened. But it happened here in 2021. What else do you see? A mob breaking windows, kicking in doors, breaching the Capitol, American flags on poles being used as weapons, as spears, fire extinguishers being thrown at the heads of police officers. A crowd that professes their love for law enforcement assaulted those police officers, dragged them, sprayed them, stomped on them. Over 140 police officers were injured. We all heard the police officers who were there that day testify to what happened. One officer called it, quote, a medieval battle, and that he was more afraid that day than he was fighting the war in Iraq. They've repeatedly asked since that day, how dare anyone diminish, belittle, or deny the hell they were put through. We saw with our own eyes. Rioters menaced these halls, threatening the life of the Speaker of the House, literally erecting gallows to hang the Vice President of the United States of America. What did we not see? We didn't see a former president who had just rallied the mob to attack, sitting in the private dining room off the Oval Office in the White House, watching it all on television and doing nothing for hours as police were assaulted, lives at risk, the nation's capital under siege. This wasn't a group of tourists. This was an armed insurrection. They weren't looking to uphold the will of the people. They were looking to deny the will of the people. They weren't looking to uphold a free and fair election. They were looking to overturn one. They were looking to save the cause of America. They were looking to subvert the Constitution. This isn't about being bogged down in the past. This is about making sure the past isn't buried. That's the only way forward. That's what great nations do. They don't bury the truth. They face up to it. Sounds like hyperbole, but that's the truth. They face up to it. We are a great nation. My fellow Americans, in life there's truth, and tragically there are lies. Lies conceived and spread for profit and power. We must be absolutely clear about what is true and what is a lie. And here's the truth. The former President of the United States of America has created and spread a web of lies about the 2020 election. He's done so because he values power over principle, because he sees his own interest as more important than his country's interest, than America's interest, and because his bruised ego matters more to him than our democracy or our Constitution. He can't accept he lost, even though that's what 93 United States senators, his own attorney general, his own vice president, governors and state officials in every battleground state have all said he lost. That's what 81 million of you did as you voted for a new way forward. He has done what no president in American history, the history of this country, has ever done. He refused to accept the results of an election and the will of the American people. Well, some courageous men and women in the Republican Party are standing against it, trying to uphold the principle of that party. Too many others are transforming that party into something else. They seem no longer to want to be the party of Lincoln, Eisenhower, Reagan, the Bushes. But whatever my other disagreements are with Republicans who support the rule of law and not the rule of a single man, I will always seek to work together with them to find shared solutions where possible. Because if we have a shared belief in democracy, then anything is possible. anything. And so at this moment, we must decide, what kind of nation are we going to be? Are we going to be a nation that accepts political violence as a norm? Are we going to be a nation where we allow partisan election officials to overturn the legally expressed will of the people? Are we going to be a nation that lives not by the light of the truth, but in the shadow of lies? We cannot allow ourselves to be that kind of nation. The way forward is to recognize the truth and to live by it. The big lie being told by the former president and many Republicans who fear his wrath is that the insurrection in this country actually took place on Election Day, November 3rd, 2020. Think about that. Is that what you thought? Is that what you thought when you voted that day? Taking part in an insurrection? Is that what you thought you were doing? Or did you think you were carrying out your highest duty as a citizen and voting? The former president's supporters are trying to rewrite history. They want you to see Election Day as the day of insurrection. And the riot that took place here on January 6th as a true expression of the will of the people. Can you think of a more twisted way to look at this country, to look at America? I cannot. Here's the truth. The election of 2020 was the greatest demonstration of democracy in the history of this country. More of you voted in that election than have ever voted in all of American history. Over 150 million Americans went to the polls and voted that day. In a pandemic, some at great risk to their lives. They should be applauded, not attacked. Right now, in state after state, new laws are being written, not to protect the vote, but to deny it. Not only to suppress the vote, but to subvert it. Not to strengthen and protect our democracy, but because the former president lost, instead of looking at the election results from 2020 and saying they need new ideas or better ideas to win more votes, the former president and his supporters have decided the only way for them to win is to suppress your vote and subvert our elections. It's wrong. It's undemocratic. And frankly, it's un-American. The second big lie being told by the former president and his supporters is that the results of the election of 2020 can't be trusted. The truth is that no election in American history has been more closely scrutinized or more carefully counted. Every legal challenge questioning the results in every court in this country that could have been made was made and was rejected. Often rejected by Republican-appointed judges, including judges appointed by the former president himself, from state courts to the United States Supreme Court. Recounts were undertaken in state after state. Georgia counted its results 3 times, with 1 recount by hand. Phony partisan audits were undertaken long after the election in several states. None changed the results. And in some of them, the irony is the margin of victory actually grew slightly. So let's speak plainly about what happened in 2020. Even before the first ballot was cast, the former president was preemptively sowing doubt about the election results. He built his lie over months. It wasn't based on any facts. He was just looking for an excuse, a pretext, to cover for the truth. He's not just a former president. He's a defeated former president. Defeated by a margin of over 7 million of your votes in a full and free and fair election. There is simply zero proof the election results were inaccurate. In fact, in every venue where evidence had to be produced, an oath to tell the truth had to be taken, the former president failed to make his case. Just think about this. The former president and his supporters have never been able to explain how they accept as accurate the other election results that took place on November 3rd. The elections for governor, United States Senate, House of Representatives. Elections which they closed the gap in the House. They challenged none of that. President's name was first. Then we went down the line. Governors, senators, House of Representatives. Somehow those results are accurate on the same ballot. But the presidential race was flawed. And on the same ballot, the same day, cast by the same voters. The only difference, the former president didn't lose those races. He just lost the one that was his own. Finally, the third big lie being told by a former president and his supporters is that the mob who sought to impose their will through violence are the nation's true patriots. Is that what you thought when you looked at the mob ransacking the Capitol, destroying property, literally defecating in the hallways, rifling through the desks of senators and representatives, hunting down members of Congress? Patriots? Not in my view. To me, the true patriots were the more than 150 Americans who peacefully expressed their vote at the ballot box. The election workers who protected the integrity of the vote. And the heroes who defended this Capitol. You can't love your country only when you win. You can't obey the law only when it's convenient. You can't be patriotic when you embrace and enable lies. Those who stormed this Capitol, and those who instigated and incited, and those who called on them to do so, held a dagger at the throat of America and American democracy. They didn't come here out of patriotism or principle. They came here in rage, not in service of America, but rather in service of one man. Those who incited the mob, the real plotters who were desperate to deny the certification of this election, and defy the will of the voters. But their plot was foiled. Congressmen, Democrats, Republicans stayed. Senators, representatives, staff, they finished their work the Constitution demanded. They honored their oath to defend the Constitution against all enemies, foreign and domestic. Look, folks, now it's up to all of us, to we the people, to stand for the rule of law, to preserve the flame of democracy, to keep the promise of America alive. The promise is at risk, targeted by the forces that value brute strength over the sanctity of democracy, fear over hope, personal gain over public good. Make no mistake about it, we're living at an inflection point in history, both at home and abroad. We're engaged anew in a struggle between democracy and autocracy, between the aspirations of the many and the greed of the few, between the people's right of self-determination and the self-seeking autocrat. From China to Russia and beyond, they're betting that democracy's days are numbered. They've actually told me democracy is too slow, too bogged down by division to succeed in today's rapidly changing, complicated world. And they're betting America will become more like them and less like us. They're betting that America is a place for the autocrat, the dictator.
Hello, traders. Nice speech by United States president. Okay, I'm going to place an order to sell short Japanese yen. The price I'm looking to sell 115.803. Okay, guys, stay safe. Listen the speech, and we will as soon as we will get filled, I'll let you know what we're going to do next. Okay, I will adjust to 115.803 just right here. We're not filled, we didn't fill yet, so you still have time to enter order to sell short Japanese yen. Okay, guys, I'll speak to you later.
We reject the view that if you succeed, I fail. If you get ahead, I fall behind. If I hold you down, I somehow lift myself up. The former president who lies about this election and the mob that attacked this Capitol could not be further away from the core American values. They want to rule, or they will ruin. Ruin what our country fought for at Lexington and Concord, at Gettysburg and Omaha Beach, Seneca Falls, Selma, Alabama. What we were fighting for? The right to vote, the right to govern ourselves, the right to determine our own destiny. With rights come responsibilities. The responsibility to see each other as neighbors. Maybe we disagree with that neighbor, but they're not an adversary. Responsibility to accept defeat. Then get back in the arena and try again the next time to make your case. Responsibility to see that America is an idea. An idea requires vigilant stewardship. As we stand here today, 1 year since January 6, 2021, the lies that drove the anger and madness we saw in this place, they have not abated.
Okay, guys, position open, short position 115.803. Okay, and stay with me, all of you who decided to trade Japanese yen, and we will go through together this trade. I want you to remind that this is real money involved, no demo account or paper account or other accounts that does not involve real money. We trade our own money, we trade our clients' money. So this is real cash. So this is real deal. I'll speak to you later, guys. After, when we will see that it will move in our advantage, we will place stop for our position, basically on profit, that we will secure our profit, and then we will see what's going to happen next. If you want to get the strategy, you need to go to company.co.uk. The strategy is not free. We're not giving away for free the strategy. You need to learn how to trade, and you need to spend some money in order to learn, to get your knowledge, how to trade, how to do arbitrage. This is all information you can find from our strategy. Stay safe, and I'll speak to you later.
God, and the goodness and gracious and greatness of this nation, we will win. Believe me, I know how difficult democracy is. And I'm crystal clear about the threats America faces. But I also know that our darkest days can lead to light and hope. From the death and destruction, as the Vice President referenced in Pearl Harbor, came the triumph over the forces of fascism. From the brutality of Bloody Sunday on the Edmund Pettus Bridge came historic voting rights legislation. So now let's step up, write the next chapter in American history, where January 6th marks not the end of democracy, but the beginning of a renaissance of liberty and fair play. I did not seek this fight brought to this Capitol 1 year ago today. but I will not shrink from it either. I will stand in this breach. I will defend this nation, and I will allow no one to place a dagger at the throat of democracy. We will make sure the will of the people is heard, that the ballot prevails, not violence, that authority in this nation will always be peacefully transferred. I believe the power of the presidency and the purpose is to unite this nation, not divide it, to lift us up, not tear us apart. See, about us, not about me. Deep in the heart of America burns a flame lit almost 250 years ago of liberty, freedom, and equality. This is not a land of kings or dictators or autocrats. We're a nation of laws, of order, not chaos, of peace, not violence. Here in America, the people rule through the ballot, and their will prevails. So let us remember, together, we're one nation, under God, indivisible. That today, tomorrow, and forever at our best, we are the United States of America. God bless you all. May God protect our troops. And may God bless those who stand watch over our democracy.
The President of the United States with a very powerful speech, a unique moment in American political history, a sitting president with some very, very strong words for a former president. In the words of President Biden, not just the former president, the defeated former president. Biden blaming President Trump directly for the Capitol violence 12 months ago. With us on Capitol Hill, Bloomberg's Anne-Marie Hordern. Morning, Anne-Marie.
Good morning, John. Yeah, after the president really painted our minds back to where we were a year ago, those images which surrounded our screens, he went squarely in and really teared into the former president, Donald Trump. For many in his party, Jonathan, this would be a moment of solemnity and seriousness that we have not seen from the president in terms of squarely blaming the former president. And for some in his party, they will say he rose to that moment to make sure the blame was put on the former president, who still to this day talks about those unsubstantiated election claims. And President Biden had also mentioned that even the former President Trump's own attorney general had said that there was no election fraud. Then, of course, Jonathan, he really wanted to talk about the fragility of democracy, which the vice president did as well. And he brought that right into what is happening at this moment as well with the United States adversaries, China and Russia, and saying that those two countries would love nothing more than to see again what happened a year ago today.
Anne-Marie, we're not scheduled to hear from the former president, Donald Trump. We are scheduled to hear from him next week on January 15th in Arizona. What are you expecting to hear from the former president?
Well, the former president is going to talk about those unsubstantiated election claims. He still continues to maintain that the election was a fraud, and this is what President Biden was saying from Statuary Hall, the, quote, first big lie as he went through that. That is what the president is going to say, and he'll probably also, Jonathan, toy with the potential running of a next presidential election for 2024. He has alluded to this a number of times, but has yet to say whether or not he will run. He'll probably use his platform at this rally to once again allude to his supporters of whether or not he is going to do that again. And his supporters, I'm sure, triumphantly will want to hear that.
Anne-Marie, as you know, tomorrow morning, this will dominate the front pages of newspapers in this country. The day after that, maybe the day after again. Then into the weekend, as we get deeper into the weekend, it's the same issues. It's the pandemic, it's the economy. How quickly do they need to make adjustments there to have the success they want later this year in elections?
It's a great question, Jonathan, because really it's like the first 6 months of 2022 where this party needs to come together to get legislation done before they all go home and start those re-election campaigns, which we already know, and many analysts are saying that is going to be a red wave in November, and then it's going to be gridlock in Washington for the next 2 years. So they have about 6 months to really work through a lot of these problems. COVID is one of them. We've seen a lot of backlash on the White House and also the CDC for messy and really, unfortunately, some miscommunication regarding what you should do if you were contracting COVID. And then it's, of course, his landmark economic agenda, Build Back Better. Can he get it done? That has the president not just uniting the country, but he has to unite his own party, Jonathan, to get that massive legislation through.
Anne-Marie, thank you. AMH down in Washington, D.C. From New York, a big focus, of course, on this market as well. About 14 minutes into the session, it's a very small bounce back on the S&P 500 by 0.4%. A similar move on the NASDAQ. If you look at the sector composition of this breakdown right now, energy top of the pile up 2.8%. Look to commodities underpinning that. Crude up through 80 on WTI. 82 on Brent. The other big sector with a big move higher, financials. The bank's doing nicely. The financials up by 1.34%. Underpinning that, the move in the bond market, 10-year yields up by 3 basis points to 173 on twos, up to 86. The whole curve, a shift higher on the 2-year yield up 3 basis points with payrolls Friday just around the corner. Coming up, Omicron cases surging around the world. Nations bracing for more policy changes.
The guidance has changed. It needs to change, but the communications from the administration as a whole have been challenging.
That's next. This is Bloomberg.
Protesters breached the Capitol.
Democracy has prevailed.
A flash mob decided to take on the shore.
Giant container ship blocking the Suez Canal.
1,000 new types of crypto coins.
Crackdown on tech in China. In the billionaire space
The
race.
Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Songs, you lie.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
On the issue of Mr. Djokovic, rules are rules, and there are no special cases. Rules are rules. It's what I said to you yesterday. That's the policy of the government.
What a story over the last week or so. Tennis star Novak Djokovic stuck in legal limbo over his vaccine exemption, navigating the rules around the world incredibly difficult. Australia, China, Hong Kong. In Hong Kong, the big banks once again tightening their rules, with Goldman Sachs and JP Morgan moving into split teams. To keep up with this is almost impossible. Bloomberg's Sam Fazeli tries to do that for us. Sam, I'm told it's all about the science, and then yet different countries have very, very different requirements of what's expected from you. Sam, 2 years into this, what's your conclusion as you look from country to country? Zero COVID in China, in Hong Kong, something in between somewhere else, open borders in other countries. Sam, does any of it make sense?
No, not at all, Jonathan. It's all mayhem. You look at one day, I'm traveling to the UK tomorrow, and I was all ready to go and take my pre-flight test. And of course, yesterday we were told we don't need that anymore, which I think makes sense. Why do I need to test if I'm going into a country that's already running at 2,000 cases per million? What difference does it make? I get it if they want to know whether I'm infected once I'm there. If there is a new variant running, then people want to try to kind of control it. But we've also proven that doesn't work either. I mean, look, everyone put some African nations on the red list and nothing happened. All the Omicron cases came and everybody's dealing with it. So the world needs to get together and think this through properly. Zero COVID is not possible because of a variety of reasons that we've talked several times on this show. So,
Sam, when it comes to policy, I asked this question to someone a little bit earlier this morning. Let's focus on the policy here in the United States. At the start of this pandemic, we were told not to wear masks. Masks weren't effective, but that was because we didn't have many masks. And now we're told we don't need a test to exit isolation, but that's largely because we don't have any tests. And I'm left wondering, Sam, is it scarce resources shaping policy here, or the science, or a bit of both, Sam? Which one is it?
well, I hope it's all driven by science, because at the end of the day, yes, right. If you don't have enough masks, you say that. You don't say you don't need masks, because that's nonsense, right? I think it's been very clear that regular testing is one of the easy ways of limiting the spread of infections, especially in a world where there's lots of unvaccinated people. So, but if you're in a world where many people are vaccinated, majority are vaccinated with triple doses, even then it becomes a bit questionable as to, you have no symptoms, you test positive, should you continue to stay home until that test becomes negative? I mean, that's a question that I think you can probably solve with a mask. But the resources shouldn't be the reason. If it is, say so.
Sam Fazeli of Bloomberg Intelligence. Sam, just sterling work for Bloomberg over the last 2 years. We really appreciate it, sir, and more still to come in 22. Looking ahead into the trading diary, a key highlight is going to be payrolls tomorrow. To look at that, Mike McKee. Morning, Mike.
Good morning, John. It's going to be very interesting to see what numbers we come up with because of the Fed issue. They're saying that the economy is much stronger than it was when they started raising rates the last time back in 2015. Here's the comparison, and you can see we're adding jobs at about double the pace almost, and the unemployment rate already significantly lower. The big issue is how fast will people come back into the labor force. The participation rate was much bigger in 2015. But then again, this year, with participation rate down, average hourly earnings are high. So we're going to see some interesting data that the Fed will have to take into account.
Just as far as the Fed's concerned, Mike, let's talk about picks quickly. Are you expecting some Fed picks before the weekend?
There's a good chance of it. The White House has been promising us something would happen foon for quite a while. The makeup of the Fed is going to have a lot to do with the speed of any kind of tightening. First of all, you've got four new voting members of the Fed rotation. Three of them, Bullard and George and Mester, are inflation hawks and have been. Pat Harker going to sit in for the missing Boston Fed president. And then we have three possible new Fed nominations, as you mentioned. One will be the vice president for supervision. Bloomberg has reported it's likely to be Sarah Bloom Raskin. Philip Jefferson, a Davidson College economics professor and former Fed economist, is in line for one governor's job. The Washington Post saying Lisa Cook, who is a dean at Michigan State University, in line for the third. We don't know all of their monetary policy beliefs, but certainly the Fed we had when those minutes came out, John, is not the Fed we're going to have when they start voting on whether and when to raise rates.
Mike McKee, that's such an important final point. I'm looking forward to the coverage that Mike will lead through tomorrow on Bloomberg TV and on Bloomberg Radio as we anticipate payrolls Friday at 8:30 Eastern Time. Up next, your trading diary from New York. This is Bloomberg.
December's jobs report was a mixed bag.
The change in non-farm payrolls comes in only half the level we anticipated.
If you looked at unemployment, it's a fairly decent report, isn't it?
It's a terrific report.
How will Omicron show up in the final look at 2021 jobs?
COVID is clearly an issue.
The number one risk is the pandemic.
There's going to be a bit of a roller coaster ride.
Tune in for the December jobs report, Friday on Bloomberg Television and Radio.
How fragile is the European energy complex?
The European energy complex has been incredibly fragile for a number of months now, and it just seems to just keep getting hit with new crises.
Minutes into the session, we move lower just a little bit on the S&P and on the Nasdaq. The Nasdaq down 0.2%, the S&P down 0.1%, led by, what are we seeing? The financials and energy, top of the pile, bottom of the pile, everything else. Those two sectors not enough to lift the index, underpinned though by higher yields and better energy prices. Let's get to the trading diary. It looks like this. ISM services coming up at the top of the hour. San Francisco Fed President Mary Daly speaking a little bit later. Jim Bullard speaking too. More Fed speak coming from Daly and Bostic on Friday. And finally, your main event tomorrow. It's the first payrolls report of the new year. The payrolls report for the month of December from New York. This is Bloomberg.
Risk number one, no zero COVID, and this is specific to China. Why is this the top one in 22?
Despite this massive case explosion with Omicron, the United States, Europe, the developed world is going to feel much more normal, finally, within weeks. But that is really not the case at all in China. They are trying harder and harder to impose strict quarantines, which is going to have big impact on their economy. And it's not going to work well, but Xi Jinping can't back away from it.
How much do you think there is a risk of that being extended globally in terms of supply chain issues and just a slowdown in general?
If they're shutting down cities, and that will include significant amounts of production, that means that we're going to continue to have supply chain challenges across the world in 2022. It also means that inflation has the ability to persist.
Will pricing have to adjust or not as a result of your greener ambitions?
We ran a big survey around 32 countries. More than 30,000 people took part. And as you say, there was a big gap in between people that were worried about climate and people that were taking action.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de Rivera. This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. Jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings there.